改变了大家的购物的方式。其实各种各样的产品，哪怕你不买，你也可以来看。当然，你看了，你就有可能会买。
It's not about, only shopping. It's about the experience. It's about having fun. You got to see 3D. You got to see in some kind of action. It's almost like a theater act.
The internet craze has taken over China. By the end of 2020, the country had almost 400 million live stream shopping users. China's live stream e-commerce market has also grown dramatically, with an estimated value of $161 billion in 2020. It's becoming popular outside China as well. So, is live streaming the future of shopping? Live streaming is not a new thing. In China, it started in 2015 with the rollout of 4G. And it was first used for entertainment and socializing. Many live streamers performed for their followers or chatted to them, making money by receiving virtual currency and gifts. In the West, live streaming is mainly the domain of avid gamers. In China, it's broken into e-commerce.
China actually has a very big e-commerce empire, so it uses these super apps, what we call that you have payment, you have search of information, you have recommendation system, and you have huge amount of goods available on the platform, and as well as a lot of consumers. So with this advantage, they merge these features of live streaming to make the influencers actually sell goods.
Here is a perfect choice: nice neutrals, beautiful print, nothing overwhelming, and the warmth and comfort of flannel. This is item.
Traditional TV shopping involves a one-way direction, whereby a host introduces a product, demonstrates certain things, and say, call this number or something. But live stream shopping is live. That in itself is a very, very big difference. It causes different psychology. And live stream shopping is a very entertaining way of actually engaging someone else.
When you shop, actually, this live streaming video will continue. It will minimize into a corner, and you can buy the items and pay all on the same app. And after that, the live streaming screen will just enlarge by itself, and the promoter will come back to screen. So it's very convenient.
Taobao, one of China's biggest e-commerce platforms owned by tech giant Alibaba, added a live streaming function in early 2016. In the following years, other e-commerce and social platforms like JD and Douyin also integrated this feature.
开头的时候还是有很多的挑战的，对画面的这个流畅，然后是否能够很真实的去还原商品，它其实在这个上面是有很高的这个门槛跟技术的这个卡口在的。不管是我们的这个用户的接受度，还是商家的这个上手的这个难度都很高，但是这几年下来，基本上难点在不断被突破的。
Over $70 billion worth of goods was sold via live stream on Taobao in the year through March 2021. Latest surveys show that over 60% of live stream users in China were watching shopping shows, and over 65% of them shopped at least once via live stream. In 2020, live stream shopping got a huge boost during the pandemic, when millions of people were in lockdown and many retailers were pushed online.
People, during the lockdown, felt like there's a need for more social interactions. This live platform creates an interesting kind of environment that gives people the sense that I'm actually interacting with you. And then live stream shopping brings in a lot more variety of things that people could buy and satisfy, the sense of losing control, especially during the pandemic.
At the heart of this craze are the top influencers who have tens of millions of followers and sell products worth millions of dollars every night. They often use their star power to get bargains from retailers, which in turn boosts their own sales and influence.
So if you think about China's live streaming, you have to know the king and queen of the influencers. The queen of live streaming, Via, she is actually having the biggest viewership and the biggest sales volume for a long time on Taobao platform. She can sell everything from Gucci sunglasses, lipsticks, homes, and cars. One time she offered her followers to go on a Tesla ride with her, and she even, for once, sold a rocket launch in her live streaming room for 40 million yuan.
接下来我们真的要上火箭。
The king would be Li Jiaqi, more widely known as Lipstick's brother. He used to be a cosmetic sales before he turned into live streaming e-commerce. And he knows a lot about the cosmetics. So he's the one that will actually put the lipsticks on himself when he's on the show.
Top live streamers like Via and Li Jiaqi have become celebrities in China and can earn millions of dollars a year. Although not everyone can be as popular, mid-ranking live streamers like Tiffany still earn a good income through sales commissions.
如果说单从收入方面来讲的话，那主播的收入是比普通的工作要高很多。但是呢，主播这个工作时刻对身体，包括对精神都有很大的一个考验的。就是每天需要集中精力，然后长达5-6个小时，这种状态是很累的。而且这5-6个小时的话，你是脑子是不停的，然后嘴巴是不停的，然后手也是不停的，眼睛也是不停的。像我们做主播，不是说单一的只做直播一件事情，然后还会有选品的一些工作，然后还会有一些其他的事情排在里面，其实是没有个人生活的。那我觉得增强粉丝影响力的话，不是说某一件事情可能今天做了什么事情你就增大了影响力，而是每天不断的内容的输出，粉丝不断的可能对你的了解，慢慢的信任你。
没有芝麻酱的味道，如果吃不习惯的话就慎买。
A lot of successful live streamers are generally very good at communication. They're very good at articulating very simply what a product does, what a product doesn't do. In order for them to sell, they need to be trustworthy and appear trustworthy, and they need to, show in some ways that they're authentic, right? So for Via and Li Jiaqi, they are able to articulate that quite a bit through their body language, through what they say. For example, Li Jiaqi will also sometimes say bad things about certain products because to him that's his honest opinion, and sometimes people want to hear that. And so they seem very credible, they seem very trustworthy, and don't forget, they're also very entertaining and very interesting. If you're familiar with Li Jiaqi, he won a Guinness record for like the most lipstick applications to models in like 30 seconds. So if you're able to create a lot of buzz with interesting things that you do, people who may not want to buy lipsticks will also stream in just to watch what he does. And then from there, you might get hooked.
这就是你一般女生出门的时候涂的口红的颜色。
Live streamers also use sales techniques such as limited time or supply. This sense of scarcity can often encourage viewers to buy.
The platform in itself creates and enhances some of these things, but you see it live. Something we call social proof has taken over, meaning that, hey, other people are interested, other people are joining in, other people want the same product. And they add it in the chat and they ask questions and they say, oh, I want this too. What happens then? It makes the whole product even more scarce.
But it's not just influencers. Local farmers, luxury brands, even mutual funds have also started their own live stream shows.
Working with very top-tier live streamers can be risky. It's not necessary that the benefits will end up with the brand. So we see company executives opening their own shows. And we see like P&G have their own sales room, which runs shows every day as well. We also have like local governors in like small towns to sell their agricultural products. So the live streaming is definitely transformed the way product owners can think about how to reach their consumers. And it enables a lot of players to actually sell.
Live stream shopping is going global. Merchants in Southeast Asia have embraced this trend. And in the West, Amazon has upgraded its live streaming function, adding interactive features like chat rooms. Companies, including Google and Facebook, are also developing and investing in technologies to integrate video and e-commerce.
直播电商它其实已经开始成为主流，它未来的发展空间跟潜力都是巨大的。
接下来大家会越来越依赖这种购物方式，会变成一个比较日常化、比较规范化的这么一个趋势。
If you look at the numbers alone, their numbers alone, Li Jiaqi's numbers or Via's numbers, you know that they can sell and you know that they can generate revenue. Are they able to sustain it over a long period of time? It depends on how innovative they are at changing some of the things that they do.
But you can't expect consumers one day turn into virtual shopping for good. there will be the nature of us that crave to go into the store, to touch the goods and actually wear it and see how it looks like and walk around in that with our friends. And those things wouldn't be replaceable with live streaming.
You could imagine that the oceans are actually the largest battery. We're storing huge amounts of energy in the oceans. The wave motion can be very deep. It can extend down several hundred meters. And once it gets to the near shore, from about 50 meters, the whole water column is moving backwards and forwards.
As we search for ways to reduce our reliance on fossil fuels, some are looking to a largely untapped potential source of renewable energy. In theory, waves off the coast of the United States alone could generate over 2 trillion kilowatt hours of electricity a year, enough to power more than half of the country.
Waves intensify and subside not as quickly as the wind, and that means that it can produce a smoother power generation curve. One of the potential advantages of wave energy is that it could act as a complementary source of power compared to other renewables on the grid if it were to be scaled up to commercial scale.
For decades, engineers have been trying to convert wave energy into electricity, but a host of technological and financial challenges have complicated their efforts.
In the years from around 2006 to 2015, there were a spate of bankruptcies in the sector, and this was largely because of a lack of kind of continuous proven projects out at sea with reliable electricity generation.
Since then, companies have been trying to develop the technologies at a steadier pace and with a smaller cash burn. But the same questions remain. Can companies develop devices and technologies that actually work? Is wave energy just a novelty or something that can become a major renewable energy source?
The sea is a very challenging environment within which to operate a power project. So seawater is corrosive and conditions are very rough. So this means that power projects don't have a very long lifetime, and it increases operating and maintenance costs.
Partly because of that, many early wave energy projects hit rough waters, such as the Palamas Wave Energy Converter in Portugal and the Isla Limpet project in Scotland. But that hasn't stopped others from trying.
Companies are focused on testing projects out at sea, proving their durability, trying to raise capital and bring down cost. The sector hasn't really converged around one single technology design, and companies are kind of undecided about which design works best.
Finland-based AW Energy is a veteran in the sector. The first proof of concept of the company's device was made in the 90s after diver Rauno Koivusaari observed the strong back-and-forth movement of a hatch cover in a shipwreck in the Baltic Sea.
The waves are generated far from the coastline, so the wind blows on the surface of the water, causing the water particles to rotate, and that rotation extends deep down below the surface, and the waves can be very long. They can be several hundred meters long. And as they come into the near shore, this rotational energy turns into an elliptical energy, and eventually backwards and forwards, as you probably have noticed if you've been swimming on the seashore in large waves, you're pulled in and out. That's the energy that we're extracting. There's a sweet spot where we deploy, so around 10 to 15 meters of water depth. That's where there's still strong wave energy coming in.
After years of research, prototyping and testing, the company has deployed Wave Roller, a 350 kilowatt device in the waters of Portugal. Wave Roller has an 18-meter wide and 10-meter high steel panel fixed to the seabed via a floatable foundation. The panel moves back and forth with the waves, capturing the energy.
It's submerged in the depth of 15 meters, so it's protected from the extreme waves. We generate electricity by capturing the movement with hydraulic circuitry in a machine room underneath the surface. That hydraulic energy we turn to electricity with hydraulic accumulators and hydraulic motors, and also a generator.
The Wave Roller has survived large waves at sea for over a year and delivered electricity via an underwater cable to the grid in Portugal. Meanwhile, the company has won a €2.5 million grant to work on an upgraded version of the Wave Roller, aiming to increase the electricity generation capacity to 1 megawatt. The upscaled device would have a bigger panel, 2 power takeoff units, and improved software to control the energy production.
We have taken into use a wave prediction algorithm that kind of tells us what kind of waves are coming into our device. That gives us few seconds to prepare for capturing more energy, and the difference in that is significant.
Our future plans are to deliver technology around the world. So I'm hoping we can be working on delivering technology to projects in Asia and also in the American continent as well.
Meanwhile, Israeli company Eco Wave Power is taking a different approach to capturing the power of the ocean. For the company's founder, Inna Braverman, developing new sources of renewable energy is a personal mission.
I was born in Ukraine in 1986, and 2 weeks after I was born, the Chernobyl nuclear reactor exploded, causing the largest in history nuclear disaster. I was one of the babies that got hurt from the negative effects of such explosion. I had a respiratory arrest and a clinical death. Luckily, my mother, a nurse, approached my crib on time and gave me a mouth-to-mouth resuscitation, which saved my life. I got a second chance in life and decided to do something good with it.
Growing up, Inna wanted to be a politician to positively change the world. After working as a translator at a renewable energy company, she decided to change paths.
Solar and wind energy were fully commercialized. There were a lot of amazing technologies implemented everywhere. I saw that wave energy, although it's an immense source of electricity, the biggest companies in the world are trying to develop wave energy with no success. And there was kind of a race going on in the world of who is the company that is going to develop a viable wave energy solution first.
In 2011, the then 24-year-old Inna co-founded Eco Wave Power. Instead of installing devices offshore, the company's devices are attached to existing breakwaters, jetties, and piers.
Our technology is very cost efficient, especially in comparison to the offshore technologies, because we don't need any ships, divers, underwater mooring or cables. We install on existing man-made structures, and all our expensive equipment, the generator, the hydraulic conversion unit, the automation, is located on land just like a regular power station.
This is the EcoWave Power conversion unit that has been operating in Jaffa Port since 2014 until 2020. Here you can see how the technology works. Basically, the floaters are going up and down and pushing the hydro cylinders, which transmit biodegradable fluid into land-located accumulators. A pressure is being built. The higher the waves, the higher the pressure, which is used to turn the hydro motor, which is turning the generators. The whole system is controlled by a smart automation system, which you can see right here. And in case of upcoming storms, the system automatically raises the floater above the water level and keeps them in the upward position until the storm passes.
The company has been operating a 100 kilowatt grid-connected device in Gibraltar since 2016, which is enough to power 100 households. Currently, Ina and her team are working on another 100 kilowatt project at the port of Jaffa in Tel Aviv.
The project will be also the first time in the history of Israel that wave energy will officially connect to the electrical grid. And our goal going forward is to expand it to all suitable breakwaters in the city of Tel Aviv and to supply a significant part of the city's electricity needs.
Today, engineers and entrepreneurs are still trying to crack wave energy. Globally, only a few hundred kilowatts of wave energy are deployed, compared with gigawatts of offshore wind. But the field has come a long way in recent years, and with the right engineering solutions, this new power source could eventually become competitive with more mature renewables like solar and wind.
I would have a lot more confidence in the success of wave energy companies today as opposed to like 20 years ago. But in the next few years, or maybe the next couple of decades, it will be more likely to be used in remote locations like islands that are otherwise dependent on expensive diesel power, or out at sea on gas decommissioning rigs, or for powering underwater autonomous vehicles.
So definitely, wave energy can compete with other renewable energy sources, but I personally believe that this is not a competition. In order to have a 100% renewable energy friendly world, we need all renewable energy sources to work together.
Who are all these people from? Who are all these people from?
So can you please tell me? I'm not going to... please wait.
You know, I've covered a lot of companies. I've covered a lot of Machiavellian companies where, you know, people play rough. I don't think I've ever seen anything on the scale of Nissan.
He is making you, but you are from this side. I mean, it's corrupt. The system is...
One of the most dramatic elements was Ravinder Pasi's home being raided by court officials in Yokohama.
You scared my wife. You scared my children. I worked in this for 16 years.
So Rav Pasi's journey into the darkest recesses of the Japanese corporate world started when he was the general counsel, the highest corporate lawyer position in the company.
In the past few minutes, Nissan has revealed that its chairman has been arrested after allegations of serious misconduct.
He was tasked with investigating Carlos Ghosn. And he was told, conduct an internal investigation and get to the heart of the matter. And then along the way, he started to notice serious conflicts of interest.
He is one of the few people who know gives an extreme amount of detail regarding the alleged crimes by Carlos Ghosn, and he's now ready to tell his own story on the record about some of the events that happened.
My name is Ravinder Passy. I'm the former Global General Counsel of Nissan Motor Co. Limited. And you could say, yes, I had a front row seat in terms of what was going on.
When Carlos Ghosn saved Nissan years ago, he was depicted in Japanese comic books as this hero, and now maybe we'll see comic books where he's the villain.
In corporate Japan, Nissan was quite an unusual company. It was led for 2 decades by a non-Japanese executive.
Well, Carlos Ghosn was a hero in the Japanese business world. If you had a global business celebrity in Japan and worldwide, it was definitely Carlos Ghosn.
In a country with few foreigners at the top, he stood out. But over the years, he saved Nissan from bankruptcy, allied with Renault and Mitsubishi, and turned the alliance into one of the most competitive in the world.
Yet as the years went on, I think his ambitions changed a little bit. He started thinking about legacy plays, and one of them was to really tighten the alliance between Renault and Japan. And unbeknownst to him, there was a contingent of senior Nissan executives that were really felt threatened by that move. They really thought that they would lose complete control of the car company, and even in the government, there was probably a little bit of anxiety about a national champion in the auto industry falling under full-blown foreign control.
Carlos Ghosn was an auto industry leader, respected by many in Japan. Now he's in jail.
The arrest of Carlos Ghosn came completely out of the blue. This was in November of 2018. He was coming to Japan on Nissan's corporate jet for a regular executive meeting, and he was met on the tarmac by Japanese authorities who whisked him away to a jail and charged him with financial misconduct crimes.
So what happened was that a power struggle ensued inside the company, and somewhere along the way, it was criminalized. By that I mean that there were allegations leveled at Carlos Ghosn about the way he reported his pay to Japanese authorities, the way he handled money inside the company, that in other contexts might have been a board action, might have been handled internally. A number of executives at Nissan decided to take this difference and take it over to the Tokyo prosecutor's office, and that unleashed a chain of events that would shake the entire auto industry.
So after Carlos Ghosn was arrested, Nissan launched an internal investigation into the events that led up to his arrest.
So Rav Passy was tasked with investigating Carlos Ghosn, and he was told, get to the heart of the matter, find out what Carlos Ghosn did wrong and bring it to our shareholders.
Yeah, it's really complicated because you had various things coming out of the weeds. 2018, the investigation has started, and we become aware of matters in terms of conflicts, actions by certain individuals that cause some concern because things might not quite be what they seem.
So in our story, we really took a close look at Harinada and his role in Carlos Ghosn's downfall.
Harinada is one of the most fascinating figures inside Nissan. He's also a lawyer. He's originally Malaysian. Hello, Mr. Hari. And he had a meteoric rise through the company and became very, very close to Carlos Ghosn and other top figures. He had a front row seat at all the major strategic deliberations at the company. And when he discovered that Carlos Ghosn, as his final legacy play, was going to tighten the relationship between Renault and Nissan, he made a decision to go against Carlos Ghosn. And he became one of the key figures that decided that Carlos Ghosn had to go.
Harry Narder was somebody who actually recruited me into the company. So I have a long-standing relationship with him, or did have a long-standing relationship with him. For many, many years, he was a mentor. I had doubts about the credibility of the process right at the start. Harry Narder had a plea deal with the Tokyo prosecutors. Now, that suggests he was intrinsically involved in some of the wrongdoing, or the allegations of wrongdoing, and it just didn't smell right, just doesn't sit right.
So there was a basic conflict of interest. In other words, Harry Narder had to deliver results to Japanese prosecutors to avoid his own criminal liability, and he's accusing and leading the investigation of Carlos Ghosn.
Some of the people who had been involved in the original alleged crimes were also looking into the affairs themselves. Ravinder Pasi began pointing out some of these conflict of interest issues. And the reason for that is essentially his concern was for the company. If the company's own investigation into itself was compromised, that could lead to a very weak position in various lawsuits that it was dealing with across the world.
I had discussions with Harry, discussions with the statutory auditors about these conflicts, discussions with HR about some of these conflicts, because at that point, we reported into him. You know, at the time, everything was quite, as you can imagine, it was, we've got to do this, we've got to do that, we've got to move fast. But when you step back and look at some of these things, you just think, my God, what was going on here? Because me, members of my team, were being placed in immediate danger. Your chairman's been arrested, a representative director's been arrested. They both happen to be foreigners. And then now what we need to do, we're being instructed to do, is certain compliance professionals need to go into properties in Brazil, for example, and retrieve evidence. They've got to do it very carefully, because if they don't do it carefully, they're going to get convicted of criminal activities. And likewise, when a team of lawyers were commissioned to go to Lebanon, I mean, one of my immediate concerns was, why are lawyers from Nissan being sent to go to Lebanon to retrieve evidence? These are just lawyers, they're corporate lawyers from Nissan. You had revelations that a number of executives had benefited from share appreciation rights when they shouldn't have. I mean, you know, substantive amounts of money being taken by these guys when they weren't entitled to take them. And you do think, yes, how is this going to look later on? It's going to look quite concerning. So that triggered, for me, the sort of assessment that, well, I'm going to have to do something, because up until this point, I haven't put down on paper these conflicts and these issues.
So Rav Pasi makes a fateful move. He writes this letter to the board listing every suspicion he has in great detail, backed up by evidence, backed up by memos, of why this internal investigation had serious problems. He sends the letter to the board, and it's crickets. He doesn't hear much of anything.
Nothing happened thereafter. Nothing at all. Just like it just gone into a black box.
And he began to suspect that there was a desire, even at the highest level within Nissan, to kind of sweep these conflicts of interest under the rug.
Unfortunately for me, I think, again, with hindsight, people must have thought that this is the nail that's sticking out, and we can't have this. Within 3 days of me submitting that to the board of directors, that letter to the independent board of directors, I was removed from the Goan Executive Conduct Matters. I was then told that I could not attend board meetings anymore. And up until that point, I had attended every single board meeting. I was then also told that after 8 years of being in Japan, I'd be going back to the UK. It eventually transpired that I'd be the VP of Projects and Transformation, managing a team of 3. So you can imagine what this feels like at this stage. Almost an arbitrary removal from Japan, where I've lived for 8 years, had 3 children there, my family has grown up, and we've been settled there, having a few months earlier been promoted to vice president at a global level, to being almost demoted.
So Pasi was essentially being reassigned to get him as far away from the internal investigation as possible, and also to a certain extent in retaliation to some of the issues that he brought up regarding the internal investigation and Harinada.
What happened to Rav Pasi can be seen as a series of corporate humiliations. I mean, first of all, his immediate responsibilities were taken away from him. Eventually, he lost, the coveted general counsel title. But it didn't stop there. Toward the end of his stay in Japan, Rav and his wife were convinced that they were being followed.
During that period, I'd noticed that whilst driving my car, I'd have other cars following me. First time I noticed this was around mid-March, and I was driving, I can't remember where I was going, but this grey van, small van, just literally started following me. And I noticed that there was somebody in the car taking pictures. And lo and behold, we were absolutely being followed either by people on foot or other individuals, 2 or 3, normally 2 burly men in a car, different cars at different times, following us around. They were following the family as well. And, given I'd seen the Nissan security department behave in a very, very egregious manner with others in terms of following and surveilling, I was very concerned as to what they were doing and who they were giving this information to. Because if they're giving this information to the authorities, you do think, why? What's going on here? I mean, this is just not normal behavior.
And this all culminated in a rather dramatic event in the middle of 2020.
Who are you people?
Where Nissan had hired a legal team and had obtained an unusual court order from the district court in Yokohama
to basically do a search of his home and seizure of his corporate laptop and phone and other documents.
If you don't let us in now, we have to break this key.
So it's a pretty extreme way to treat someone who had spent 16 years at the company.
These people have all come in. We don't really know who they are, apart from the fact that I've been shown a badge that says the Yokohama court. And they're here to recover a laptop and a mobile phone. It was even more weird because I'd highlighted to the directors that certain Nissan executives were trying to recover this laptop and this phone whilst I was still in Japan. And I was very concerned because it had evidence on there that related to misconduct matters and other forms of inappropriate conduct. It was just another form of intimidation, another form of harassment, forcing me almost to leave the company and the country. Because once they'd retained and obtained these items, we were still followed, which, again, I just couldn't understand. What is the point of doing that? You know, this isn't a car company. This is not the KGB.
I think it's fair to say that Rav Pasi didn't have full battlefield awareness of all the intrigue going on at Nissan. I mean, Harinata is interesting because he's both charismatic and charming, and one of the most brutal corporate infighters one could ever run across.
This is a confidential company email, right? You should not have this.
If he had fallen into line, he would probably still have his job at Nissan, be paid very well, and continued his work.
A career that he spent 16 years building at Nissan is irretrievably broken. It's been smashed to smithereens. He and his family paid a huge price, certainly. But in terms of being able to sleep at night, I think, he's come out ahead.
I highlighted issues to the highest levels of the company so that they could be dealt with appropriately by those in charge. There was no response to those, and there was retaliation against me. What's really profound, like absolutely profound, is that none of your colleagues, I mean people who you have known for years, forget it.
Yeah.
You're on your own.
Yeah.
And you got to be ready for that. You've got to be ready for that. If you take it on anyway.
This is the awful truth. There's always someone in the family that's pushing it.
This lady does not deserve to be taken advantage of, especially at your age with your own grandchild.
Yeah.
My grandma is having to sue them. I'm testifying against them. Nobody's talking. They're one floor below right now. I get afraid to go on the elevator. It's sad that it had to devolve to this.
It's like a soap opera to me.
It's a very sad thing.
It's a family feud.
A family feud.
here's a family that on paper you would think has the wealth that so many people seek, yet at the end of the day it seemed to sort of rip everybody apart. My name's Tom Schoenberg. I'm a senior reporter here at Bloomberg News, cover financial enforcement. I was approached by someone close to the Schottenstein family and asked whether or not I would be interested in writing about Beverly Schottenstein and this case that she had against JP Morgan. And it was immediately clear that there was a great story here to be told. So I started just, assembling all sorts of documents that the family made available to me. That included a diary that Beverly had begun writing when she started having suspicions about what was actually going on with her money. Beverly obtained her wealth from the Schottenstein kind of retail empire that has at times included Big Lots, Value City, American Eagle Outfitters, DSW Shoes. Beverly's husband died, and at which point they sold off their portion of the company, bringing them an enormous amount of wealth at around 1990. Estimates of her wealth were around $90 million. She, for many years, had that pool of money being managed by outside advisors. Her grandsons in the late 2000s had both graduated and were becoming financial advisors. She gave them a little bit to work with, and over time, her grandson, Evan, became the trustee of her entire estate. Managing sort of family money is not a conflict. In fact, some ways in wealth management, it's kind of how you get your start. It's kind of the seed that you need to sort of get going in the business. But Beverly started having suspicions that something was wrong probably in around 2016.
Well, there were suspicious things, but taken separately without everyone talking about their own experiences, it was hard to really put it together.
She had written a check to her caretaker, Dawn, that bounced. So she went down to her local Chase branch to sort of find out what was going on. She wasn't getting paper statements in the mail, so she asked them to print out a number of her statements having to do with her checking account and her credit card account.
So we went to the bank and asked for the statements. And she got a whole year and going through all of them, page by page by page.
And it was there she saw all sorts of charges that she said she didn't authorize or didn't know about.
I was becoming very, very suspicious. I was starting to look in the money part, and that's what bothered me more when I saw that money was going. And I was not a big spender.
Around the same time, Dawn, she starts noticing Beverly's son, who lived in the condominium below her, came up with Evan with a shredder and started grabbing papers in her office area, including some with JP Morgan letterhead, and just started sitting at the kitchen table just shredding documents over and over.
Yeah, they came in one morning.
They used to do it in the back.
Through the back door, and they brought the shredder inside. And then they went in the drawers in the office and took out all the papers, and they started doing it. I was very suspicious because I know you don't go around and destroying papers.
Beverly said that they had done this many times before.
That's when she said to me, Dawn, I'm going to write my feelings in this black book.
Diary.
And it's a diary, and she started writing. Each day she would write a little at a time.
Around the holidays of 2018, a package had arrived, a FedEx package, and in it were materials about a venture capital fund based out of the Cayman Islands. Dawn and some other family members take a look at this, and they see that Beverly is signed up for this fund to the tune of $5 million over the course of several years.
And that was really the beginning of it. That was sort of the tip of the iceberg when it became obvious that something was going on, that my grandmother really wasn't aware of this fund.
Beverly started to panic. She got really upset and called, JP Morgan's headquarters in New York and asked for Jamie Dimon. She said she was told someone would call her back, but she says that never happened. She wrote a letter to Evan and Avi, and in there she laid out a number of things that were concerning her: unauthorized trading, the checking account. She had about $1 million worth of jewelry in a safe deposit box, and that her son Bobby had the key to that box, and that jewelry had gone missing. All this was kind of packaged in this, 5-page handwritten amendment to a will and trust.
There's such an evolving narrative about why the jewelry was taken. The only truth we really know is that the jewelry is gone. But why it happened, there have been a lot of different stories.
You just don't take your mother's wonderful things and hand it out.
And they emailed that note to J.P. Morgan to seize all activity on her account.
And it ended up setting off a firestorm after that. As soon as they got this email that there was a cease and desist and that she wanted to send her money and change brokerage firms, they were actually vacationing one floor below downstairs. They're there right now.
The next day, Beverly's in her place. The granddaughter's still in her place visiting. Dawn is there, and up comes Bobby kind of barging through the door. And he's screaming about what was sent to the J.P. Morgan. They're now investigating them. And he's furious, takes his mother and sort of puts her into a chair, gets pen and paper, and she says physically forced her to write a retraction letter.
They were pushing me around.
It was a scary time. I was really afraid, too.
I had to take her to the doctor, and she did an x-ray because she was in so much pain.
The locks had to be changed. The phone number had to be changed. I really thought we were going to have to hire guards to be outside just for protection.
Oh, it was terrible.
Horrible scene.
Beverly brought her case before the Financial Industry Regulatory Authorities, usually known as FINRA. It took several months of hearings. She sees all sorts of transactions that's going on, hundreds of them that she claims that she never knew about, never authorized, but yet were logged in J.P. Morgan's files as having been direct requests from her. That included the sale of a large amount of Apple stock worth several $1 million, as well as all her stock in Big Lots. Over the course of their time with J.P. Morgan, Evan and Avi were making all sorts of trading on her account that was generating millions of dollars in commissions for themselves and the bank, yet she was not sort of getting any of the type of gains that you would expect sort of an $80 million account in a bullish market to be able to get. They issued a ruling entirely in her favor, finding that her grandsons, as well as J.P. Morgan, they were liable for violating their fiduciary duty, misrepresenting themselves, and they also found that the bank and her grandson, Evan, were liable for elder abuse. Evan and Avi, they were fired from J.P. Morgan. They issued an award of about $19 million. I reached out for comment, and J.P. Morgan emphasized that Evan and Avi were no longer with the firm and that their actions do not represent the sort of values of the bank. I reached out to Evan and Avi, heard back from their lawyer saying that, they disagree with the law and the facts that FINRA kind of used to decide the case against them and are seeing if they can have it withdrawn. Her son, Bobby, wrote her a letter, said his sons weren't criminals, and he also admits to taking her jewelry. And he says he needed it to pay off some bad business debts he had.
They never once came up to say, I'm sorry.
If there had been an apology and some acceptance, and asking for forgiveness from my grandmother, I don't think we'd be in the position that we are now.
Since the piece came out, we've received dozens of messages from people, many of whom are telling their own sort of personal tales of, kind of financial advisors gone bad, or family members who got control of an estate and abused, those within. Seems that it's really resonated with a lot of people. I keep, hearing a lot of feedback about Beverly and how, a lot of people feel she did the right thing.
You're never too old to stand up for yourself and try to right an injustice. She was adamant that she wanted to stand up for herself, but at the end of the day, they did wrong.
It's a painful life lesson. Beverly taught them that you don't mess with grandma.
On April 20th, oil markets did something they never had before, and they crashed, went into negative territory and closed the day at minus $40. Meanwhile, in a place called Thaden Boyce in Essex, a group of 9 traders, led by a guy called Cuddles, made $660 million over the course of a couple of hours.
The price of oil has collapsed to a record low.
We've never really seen anything like it. WTI this morning down more than 35%.
People maybe wouldn't have been so surprised if the oil price had fallen to zero, but the oil price went to minus 38. It went far lower than anyone had expected. And so lots of people in the market were saying, well, hang on, something else is going on here.
A couple of months later, I started to get wind through a kind of network of sources that a tiny firm in the outskirts of London had made a huge amount of money that day and potentially had some part to play in what happened.
The information we got was that 9 traders at Vega Capital London had made in the region of $660 million in one day. As a group, I think they made as much money in one day as Apple makes from its international sales in one day. I mean, it's an insane sum of money.
Did they pull off a fantastic trade? Did they predict the way the market was moving and get it absolutely right? Or was there something else going on, and had they actually done something that breached market rules in a bid to sort of push the market? And that investigation is ongoing. So Paul Commins is a trader who cut his teeth in the pits in the 80s and 90s when everyone had a nickname. His was Cuddles. If you can imagine, that was a very sort of cutthroat type of world where people are doing, hundreds of thousands and millions of dollar trades by shouting at each other, giving hand signals, and then sort of scrawling on scraps of paper.
The culture of the trading pits in London was very influenced by the working class guys who became traders there. They weren't like the city bankers that had gone before them. They weren't usually Oxford or Cambridge. They didn't wear Savile Row suits. They were ordinary working guys who happened to have a talent for trading. And a lot of them came from Essex.
I think it was 400 traders in the pits, and Cuddles in his oil and gas pit was described to us as amongst the top 3 amongst that, was very successful and made very large amounts of money as a young man. But inevitably mechanization and the arrival of electronic markets was the kind of death knell for the pits, and in 2005 the IPE closed down.
And when the pits shut down, a lot of the traders who worked there lost their jobs or quit or went to work for financial institutions. But Paul Commins decided to start his own trading collective out in Essex.
Some of them are ex-pit guys, cut from the same cloth as him. Lots of them are actually sort of in their 20s, and they're his, drinking buddy's son, or they're his own kids' friends from football. They're young lads, hungry and ambitious, and he brings them into the fold. And fairly shortly, he's got, maybe a dozen or so traders that they're independent, let's be clear, but they're all part of this collective.
Yeah, I'll let Liam deal with Essex.
I am from Essex, so I feel like I'm free to get into this.
Sweet, as they say.
If you were to ask someone in Britain how they would imagine a kind of Essex person, they would see someone who's maybe slightly flamboyant, with a sort of Cockney accent, a sort of Guy Ritchie-style accent. You know, not afraid to splash the cash, but it's probably pretty bright and has done well for themselves.
Don't even make sense, does it?
But, you know, these guys, they drove around very nice Rolls Royces and Bentleys. They went to places like Marbella on holiday.
Baden-Boyce is a very wealthy place. You have to have considerable income to be able to afford to live in that village. It's a really nice place to live, and it's 20 minutes tube ride away from the city.
Earlier in the summer, we have this lead, which is that there's this tiny firm called Vega Capital London, and they were the biggest winners from the biggest oil crash in history. You know, anyone that covers markets is going to be surprised about that. You know, you're thinking your BPs of the world or your Glencores, but there's this tiny firm.
And one of the big challenges that we had was actually finding out who worked with Vega Capital. It wasn't immediately obvious, and at first we had absolutely no idea. If you go to the Vega Capital website, it says it's under construction. If you do basic online searching, it's very difficult to find anyone who's publicly connected to the company.
So inevitably, we're incredibly curious at this point. Like, who the hell are these people?
The more reporting we did, the more it became clear that this group were connected socially as well as professionally. They went to weddings together, they played golf together, they would go on holiday together. We found out that a number of them were members of the West Ham Supporters Club in London. A few of them started companies together, so you could see all the connections between them and start to see a distinct group emerging.
And it really just was this kind of shock that, you know, this wasn't just like a hedge fund or a firm you'd never heard of. This was actually a group of buddies who all had the same experience on this day and had all made a huge amount of money. So if you're an oil trader, there's a number of different ways you can trade, and probably the most popular is WTI futures contracts.
And it's basically a contract that says, I'm going to buy 1,000 barrels of oil from you at this point in the future, or I'm going to sell 1,000 barrels of oil to you at this point in the future.
It's actually just a financial contract to gamble on to predict whether oil is going to go up or down.
On the 20th of April in Essex, there have been signals for a while that this was going to be an exceptional day in oil markets. And we know that some of them arose early and started their trading in the early hours of the morning while it was still dark outside.
Essentially what they were doing is buying contracts that gave them an obligation to buy oil at whatever the price ended up at 2:30 p.m. So they're basically placing a bet that oil was going to fall throughout the day.
But they're simultaneously selling lots of oil as well. And whether they make a profit and how much profit they make is the difference between what they buy the oil for and what they sell the oil for. Now, of course, we now know throughout April 20th, the price dropped and dropped.
So this is going very well for them. You know, they are committed to selling oil at these prices, and the prices are continuing to fall, which means they're going to be able to offset it and buy oil at cheaper at the end of the day. Now, once it gets to kind of 1:30, 2 p.m., that's when things start to get really interesting. Suddenly there's a kind of influx of buyers and sellers, you know, as desperation increases in the market and trading volumes go up. Now at 2:08 p.m. exactly, something bizarre and unprecedented happened, which is that oil passes into negative territory.
And it fell to a record level of minus $38.
We've never seen anything like it, period, in terms of the contraction of the global economy.
That huge gulf between what they were buying the oil for and what they were selling it for enabled them to make more money than they ever thought possible.
So their profit was the difference between minus 37 and all of these positive numbers on every contract they sold.
The price of crude briefly hit minus $37 a barrel. For one group of traders operating from a small office, it was a very, very profitable day.
It's important to remember this had never happened before in the history of oil trading. No one could have predicted it.
I can't think of another example of where you enter a trade and you get paid on both sides. You get paid both to sell and to buy. It's unthinkable.
One thing we know about the Cuddles Trading Arcade is that they were very comfortable taking large risks. And, you have to be clear, this was a large risk.
Yeah, we spoke to oil traders, both people that know these guys and people that don't, and they all say that this is, incredibly risky.
And that's actually what stops a lot of oil traders doing trading like this. They simply aren't willing to stomach the risk. But Cuddles and his friends were.
So when the kind of final calculations came down, the group of the 9 most profitable traders made $660 million or thereabouts between them. I mean, if you can imagine, I think 3 or 4 of them made in excess of 100 million each.
One of the astonishing things about this trade is that 2 of the individuals who made more than $100 million in a single day were in their 20s. One of them was 22 years old. You know, only a few years earlier, he'd been posting on his social media about doing teenage stuff with his mates in town and going to see girls and rap music. And here he is a few years later making $100 million in a single day's trading. When me and Liam discovered that, we were just, we couldn't believe it. We couldn't believe what we were seeing. Oil trading is a zero-sum game. Anytime you're making money as an oil trader, someone else is losing it.
Amongst the biggest losers were the investors in this Chinese fund, Crude Oil Treasure Fund. There were thousands of them, and they lost everything.
Lots of people had put their savings into oil funds. They lost money that day. Big banks and brokers who sort of stand in the middle of trading parties, they lost money that day.
And another interesting thing is that oil-producing countries like Kuwait or Canada, they sell oil as an average of the WTI closing price over the preceding month. So the fact that one of those numbers in that average was minus 37 meant, if you can imagine, countries like Saudi Arabia and Kuwait potentially lost a couple of dollars on every single barrel of oil they sold that month.
Vega Capital's traders made such an extraordinary sum of money that it was inevitable there would be some scrutiny of what they did. But it wasn't just the sums of money they made. In the vital half an hour before the settlement price was set, they were by far the biggest sellers of oil futures in the market, which is an incredible thing to think about when you consider that the other participants in that oil market are going to be the world's biggest banks, you know, oil majors, BP and Shell, and here you have a group of 9 guys in Essex who are having this significant influence over a global market for oil.
I mean, I think you have to assume that if these guys had made $7 million or $10 million, they probably would be celebrating in Essex right now. But the fact that they made closer to $700 million has meant that they are facing understandable scrutiny.
We wrote individually to all the Vega traders who did exceptionally well that day, and we got a letter in response from a law firm representing the group. And the law firm was at pains to point out, number one, that they haven't been accused of any wrongdoing, that they all traded independently and separately, and they'd basically all made up their own minds that this was what was going to happen in oil markets based on publicly available knowledge, and decided to execute this trade.
What I love about these stories is there's a real variance of opinion, and some people will look at what happened and think that must be dodgy. They all traded at the end of the day. They all made a huge amount of money while all these people lost. That's shocking. But lots of people say these guys are at acute disadvantage. They're in a market that's inhabited by, you know, huge technology-driven funds and firms and oil giants that have got all the advantages in the world, and when you get a bunch of Essex geezers who essentially beat the market and find a way to make a huge amount of money, they should get a pat on the back, really, because that's the dream. Since this happened, a lot of the guys have stopped trading the monthly settlements that they'd done so well at in the past. Several of them have set up new companies. They've essentially gone very quiet. You know, any kind of social media presence they had has kind of closed down. By all accounts, they're, you know, waiting this out.
It's certainly too early to try and predict how the regulatory investigations are going to pan out. You know, we just don't know. There's a number of potential outcomes for these guys. You know, potential punishments if there are any findings of manipulation against Vega or anyone affiliated with it might be, you could be fined, you could be banned from trading, and, you know, in the most extreme cases, there have even been criminal prosecutions in the past of people who have been found to have been manipulating the settlement and misconduct related to trade at settlement. There are other outcomes too. You know, one obvious one is going to be that they're able to walk away from this life-changing trade with all the money that they made and celebrated as heroes in the trading community. That, you know, they'll go down as legends.
very important, given the nature of the climate crisis right now, for the general public to have an understanding of what progress is or is not actually happening. And I think many readers right now, they'll see these hundreds and hundreds of companies making these big, bold climate claims. And they would be forgiven to think that, you know, we're well on our way to meeting the emission reduction trajectory we need to be on. And the reality of the matter is we're just not on that trajectory. And a key reason for this sort of disconnect is the use of offsets that aren't doing what they claim to be doing.
We have a massive potential for sort of willful blindness. We can convince ourselves of things regardless of what the facts are. And so that's what tends to happen in these cases. It's not that anybody is setting out to commit climate fraud. They sort of walk themselves into a situation and they convince themselves of one thing, and that allows them to convince themselves of another thing. But at the end of the day, they're doing something that makes no sense at all.
My name is Ben Elgin. I wrote the story about how the billion-dollar market for carbon offsets is setting back the fight against climate change. So one of the challenges in reporting on carbon offsets and trying to figure out what's going on is really finding good experts who have been steeped in this marketplace and are willing to candidly talk about it. One of the best people for this is a fellow named Mark Trexler, and I've been talking to him for more than a decade.
My name is Mark Trexler. I've worked in climate change for the last 30 years. I was actually hired by the World Resources Institute in Washington to work on the first carbon offset project in 1988. In terms of defining a carbon offset, one of the beauties, so to speak, of greenhouse gases, sort of the silver lining of greenhouse gases, when you put up a molecule of CO2 into the atmosphere, it can be anywhere in the planet in 7 days. And therefore, if there's an option to reduce emissions on the other side of the planet, and you can do that very cheaply as compared to doing it in your factory, for example, then why not pay that person, that factory on the other side of the planet to reduce their emissions? Then you are, in a sense, offsetting your emissions, and the atmosphere doesn't really see your emissions anymore.
So carbon offsets have been around for quite some time, and they were actually key with these international climate agreements, such as the Kyoto Protocol, which mandated the wealthiest countries reduce their greenhouse gas emissions.
The treaty was signed on the 11th of December, 1997.
Decided. The business community in general saw carbon offsets as a huge opportunity to comply with whatever policies and measures might be coming down the pike on climate change much more cost effectively.
We've seen a huge surge in companies making big proclamations about how they're going carbon neutral or zeroing out all of their carbon emissions.
We're going to reduce our carbon footprint to net zero.
Unilever is committing to net zero emissions.
We can achieve a net zero emissions world.
We began looking at these corporate claims of dramatically reduced emissions, and we noticed so many of these companies were using carbon offsets to achieve these aims. And as we began to look at the carbon offset projects themselves, what we found is that the environmental benefits claimed by these companies are not actually what they seem to be. And as we sort of saw and spotted a number of these very aggressive carbon offset projects, which appeared to be generating inflated credits or bogus credits, we saw a number of them were associated with the Nature Conservancy. This surprised us. The Nature Conservancy is the world's biggest environmental group. They have about $1 billion a year in revenues, and they've been around for 7 decades. They've preserved about 125 million acres of land, and they've done so many good works over the years, and they've been very strong in terms of working with corporate partners. The Nature Conservancy has taken a different approach, a very pragmatic and pro-business approach. They will not go out and criticize a big polluter, but they're very happy to work with them. Some might say that, well, that's selling out, but others would say, and those at the Nature Conservancy would say, these companies have deep pockets. They can help fund important preservation work, and we have absolutely no problem working with them on this stuff. So companies are very warm, and they've partnered with the Nature Conservancy for many years. And yeah, it definitely lends a sheen of credibility to these projects.
Here's 20 new reasons to visit Disney World this year. 1, 2, 3.
If you look at, for instance, Disney, that's a sprawling company with theme parks and cruise lines that burn up diesel fuel. They have office buildings and television studios that consume electricity. So these companies are trying to make major reductions in their carbon footprints, but it's very difficult to change these fundamental ways their businesses operate. So Disney has been a big buyer of carbon offsets that are orchestrated by the Nature Conservancy. One of the projects that they buy from is called Pennsylvania Ridges. And that's a plot of land. Most of the land is actually about a 3-hour drive outside of Philadelphia. Interestingly, this land, 3,000 of these acres, was actually acquired by the Nature Conservancy in the late 1990s. This land was imminently threatened. There was a pending logging contract on this land. So they do what they've done so well for all of these years, which is they go out, they raise money from local philanthropists, and they go buy this land to protect it from developers and loggers. And at the time, according to an archived version of the Nature Conservancy's website, when they were proudly announcing this deal, they said these threats have been abated because of this acquisition by the Nature Conservancy. So it's really interesting now, fast forward 2 decades to earlier this year when they put forward this carbon project. And if you look through it, this land is a key part of that carbon project. And what they're now saying is this land is now, once again, imminently threatened. 72% of the trees are going to be cut within 5 years. Now, this is just astounding because this land is owned by the Nature Conservancy. They do not clear-cut land that they've bought through philanthropic donations. So this scenario that they've put forward to get carbon revenues is not really plausible. And what that means is when you have Disney coming in and buying these credits, when it eventually lowers its carbon footprint because of these credits, well, that won't be a credible or truthful claim by Disney. So this is an organization that truly understands the threat of the issue of climate change and is wanting to do its part to address this. However, in this situation, it just appears their drive, which they've had for decades, to increase the amount of revenues that it can use for land preservation work. Nature Conservancy and many others see that carbon credits as a pot of money that they can tap into to further their own benevolent aims. But unfortunately, what this has resulted in is claims of climate progress that just aren't really happening. So the Nature Conservancy defends vigorously these deals, and they and others will say, look, our projects are just following the rules that these registries set up. So some would also put some of the blame on the registries themselves because they're setting up the rules which allow these vapid projects to get up and sold. So we've reached out to all of the companies we mentioned in this story, including Disney. They didn't want to be interviewed for this story, but they all told us that, look, we have to rely on the experts out there, and those experts, they say, are these carbon registries that have been set up. Most of these Nature Conservancy deals are set up and sold on this exchange. It's called the American Carbon Registry. Now, it's the oldest of these registries that allow voluntary carbon credits to be sold. They've been around since 1996. What these offset registries do is they set up rules, and any carbon offset project has to follow those rules. But there's this tension that's always there. If the rules are too strict, then it's going to be very hard for carbon offset projects to get up and running. So there's this this balance going on where the registries want rules that attract projects, but they don't want it to be so strict where it will disincentivize projects from getting listed.
One of the challenges with designing carbon offset systems is that there are normally two people at the table. You have buyers and you have sellers. And to some extent, you have policymakers, but you know, the buyers and the sellers are really the ones with the expertise, with the incentive to really participate hard, make a lot of things happen. And the challenge there is that both of them sort of want the same thing, or they're both happy with the same thing. They're happy with low-cost offsets and a lot of them, because that works for their business model. You end up, though, with nobody really representing the atmosphere, so to speak. Nobody's really representing the climate in those discussions. And so the policies end up biasing the whole system, and you end up in sort of a race to the bottom, and that's what we've seen happen. You know, when it comes specifically to the topic of carbon offsets, you know, I am a fan of carbon offsets in the sense that they can help mitigate climate change. They absolutely can. But, you know, if we're not going to do it correctly in a way that actually does help mitigate climate change, then it's nothing but a distraction. And, you know, after 30 years, you have to start wondering, is it really just a distraction? And that's really unfortunate, but that's where we are. Ultimately, what needs to happen is systemic change. You know, we're sort of nibbling around the edges with some of these different things. We need to change how we produce energy. We need to change how we transport ourselves. We need to change what and how we eat. You know, we need systemic change associated with transitioning to a low carbon economy. A lot of what we're doing today is not promoting systemic change. It's sort of trying to stick your thumb in the dike to preserve the current system. And at the end of the day, that can't really work.
The Hyperloop. There's a good chance you've heard the name by now.
This is the Hyperloop system. It can take people hundreds of miles in minutes.
The Hyperloop, a series of tubes that would transport people in pods at ultra-high speeds over long distances.
This is a remarkable new form of transportation that can whisk people from city to city in a flash.
29 minutes from New York to D.C., 30 minutes from L.A. to San Francisco.
For years, we've been seeing these futuristic, utopian renderings of some cross between a spaceship and a monorail. But lately, the Hyperloop is becoming much more real.
Yes! It was surreal to be even sitting inside a Hyperloop, and just even more incredible to actually be like riding down a track in something that was nothing more than a crazy idea 6 years before.
Companies all around the world have been developing and testing the technology needed to propel passengers at speeds of over 1,000 kilometers per hour. But for many, speed is only the first step to unlocking the full transformational effects of a new mode of transportation.
Fast is what we just sort of take for granted in the Hyperloop world. It's the network effects that really deliver the benefit. And that opens up a completely different scale of economic opportunity.
We've got planes, trains, automobiles, and boats for getting around Earth. But what if there was a fifth mode? And I have a name for it, which is called the Hyperloop.
The Hyperloop?
Hyperloop, yeah.
In 2013, while riding high on the growing success of Tesla and SpaceX, entrepreneur Elon Musk released a white paper outlining the basic framework of the technology he called Hyperloop. The basic idea goes a little something like this. A tube reduces the air pressure to a near vacuum-like environment. A Hyperloop pod is then suspended in the tube, usually by magnetic levitation. The whole pod can then be propelled forward. Because there's no traditional friction sources like air resistance or rolling friction that would push back against the pod, the Hyperloop is able to move at incredibly high speeds and do so fairly efficiently. Despite its futuristic name, however, the general concept behind Hyperloop is actually pretty old. In fact, New York City's first attempt at an underground public transit system in the 1870s was based on a similar principle. The pneumatic transit system was short-lived, however, only stretching one block and topping out at a rather leisurely 10 miles per hour. While Elon would make some 21st century improvements to this concept and bestow a very 21st century name, he wouldn't end up pursuing the technology itself, instead electing to focus his efforts on something a little bit deeper, literally digging the requisite tunnels via his boring company. It would take another billionaire industrialist who dabbles in spaceflight. No, wait, not that one. Yeah, that's the one. After Richard Branson would make a large investment in the company Hyperloop One, it would be renamed to Virgin Hyperloop.
What we've always been trying to do as a company is show that this technology could work, that it could be made safe, and that ultimately it's something that's happening in the next couple of years, not the next 20 years.
Josh Geigel is the co-founder and CEO of Virgin Hyperloop. In a familiar tech startup story, he's seen the project go from a garage to a large-scale testing facility outside of Las Vegas.
So we started building the first kind of Hyperloop system in 2016. We've done a lot of work, about 500 tests that we've done on that over the last 5 years. And what we realized that we need to do is take that technology, show that it can be commercial, so drive the cost down, improve the efficiency, improve the performance. But the key thing is actually making it approachable and safe for individuals.
In order to do that, Josh, along with Virgin's head of passenger experience, Sarah Lucian, bravely volunteered to take the inaugural ride.
What her and I were realizing is we're the first two people sitting in a Hyperloop. The only type of people that have gone through this environment are in spacesuits, and there we are in just normal clothes because of the system, the safety of what we've designed.
3, 2, 1, launch.
And then once we started going, you felt a bit of acceleration. We accelerated a little bit harder than we would in commercial. It'd be like a sports car. Yes. We got up to about 108 miles an hour on that test. And it's a short run. It's about 500 yards or so, and came to a stop.
The test, lasting only about 20 seconds and covering only a quarter of a mile at just over 100 miles per hour, is a long way away from a true functioning Hyperloop. But as for optics, it's a crucial step for the future of funding.
And the number one question we got from investors or from project proponents or just people in general was is a Hyperloop safe? And what better way to show something is safe than by actually getting people on it?
But convincing investors and governments that would likely be fronting some of the construction costs for an unproven technology is no easy task. First and foremost is the question of safety.
Most people don't know how an airplane works, but yet they get on an airplane. They get on an airplane because, it's faster than driving. And most importantly, they've probably gotten off of one before. They've seen someone get off of one before. And so what we set out to do was actually show that Hyperloop could be safe with two normal people, not astronauts, not adrenaline junkies or test pilots or anything like that. Two normal people getting on a Hyperloop, and then most importantly, those two people getting off.
But beyond safety concerns, constructing Hyperloops will undoubtedly require a significant capital investment, to the estimated tune of around $60 million per kilometer of track. So a track from San Francisco to Los Angeles, for example, is likely to come with a price tag over $10 billion. And before large governments are willing to come in and front those costs, investors who are funding Hyperloop development must accept it as a long-term mixture of technology and infrastructure investing.
Investors that are used to short returns because you're developing apps or something to that effect, those aren't the investors that really get excited about Hyperloop. What you start to see is the people that are looking at platform technologies, right? So this idea that because the smartphone existed, Uber could exist, right? So who are like the Vanderbilts of this century? And that's the part where you're going to get a lot more no's than yeses. But those people that have the ability, the fortitude to stick it out, to see the game-changing platform here, those are the people that we're looking for. And since we've done that passenger test, there has been a lot of interest that's really, this is a lot sooner than I thought.
Envisioning the ripple effects of what Hyperloop could achieve, though, is fairly challenging at this stage of development. It's fast, yes, but for point-to-point travel, traditional maglev trains can move pretty fast as well. And outside of China, South Korea, and Japan, even those haven't seen much adoption elsewhere due to the high costs and questionable profitability. The Shanghai line in China, for example, loses around $100 million every year. Hyperloop companies, however, believe they can offer something different than traditional railway lines.
My name's Alan James, and as far as I know, I'm the only guy on the planet who's written a government-level business case for 300 kmh conventional high-speed rail, 500 kmh maglev, and 1,000 kmh Hyperloop. It's fundamentally about moving people from where they are to where they want to go, when they want to make those journeys, and doing it in much smaller numbers. So pod designs for Hyperloop range from 12 to 28 seats, typically. Why are they small? It's because small enables the network to operate flexibly. And a great example of that is the east-west strategic route across the north of England, from Liverpool to Manchester to Leeds. So to get from Liverpool via Manchester to Leeds by train is just short of 2 hours today. It'll probably take you 2 hours driving as well in average traffic conditions. Net result is those three city regions remain three separate entities: Liverpool, Manchester, Leeds. There's very little commuting traffic between those urban areas. Hyperloop absolutely changes that from the ground up. Liverpool to Manchester is a 5 or 6 minute journey. Manchester to Leeds is also a 5 or 6 minute journey. What that effectively does is create a single supercity economy.
In this vision, the Hyperloop acts a little more like a highway, where pods have fixed destinations and don't need to stop along the way. Meaning you can travel on a Hyperloop network from, say, Liverpool to Leeds, while the pod behind you travels from Liverpool to Manchester. And if that metro Hyperloop network is connected to other networks from the same location, you could travel from Liverpool to Paris or Liverpool to Amsterdam, all without making a single stop.
For passengers, for business, for leisure, that is utterly transformational. For high-value freight and logistics, it's equally transformational. But critically, if you do a Hyperloop network at scale, you begin to deliver massively significant carbon savings too.
A multi-regional Hyperloop network could become a replacement for both short-haul passenger and cargo flights and traditional ground transportation, both of which are significant carbon producers.
one Hyperloop connected distribution hub, perhaps at an airport that is predominantly used for international air freight, replacing maybe 10, 12, 15 distributed road hubs. It takes a lot of polluting and inefficient truck haulage off the roads. That itself means roads gain extra capacity.
Hyperloops will still need to use electricity to both move pods and maintain the near vacuum environment in the tube. Proponents of the technology believe that this can be done by using renewable sources, including a combination of solar panels and battery technology that could be used along the Hyperloop itself. But even with all multipliers of time and carbon emission savings that a Hyperloop network may provide, the investment capital required to actually build such a network becomes even more economically and politically daunting.
Committing doesn't mean spending billions on day one. Committing means, how do we phase it?
One company in the Netherlands is working to develop that technology, and perhaps more importantly, the international coalition needed to make the Hyperloop network a reality.
So we are here in Europe's first full-scale Hyperloop test facility, where we can already prove every conceptual technology of the Hyperloop.
This is Tim Houter, a co-founder and CEO of Hart Hyperloop, headquartered in the city of Delft. And while this testing tube might not seem as large as others, inside is a key technology to create the on- and off-ramp type infrastructure of a Hyperloop network. That is, a lane switch.
That's something we can already test here. You can actually see it here, that the track is diverging from one track into two. That makes it possible to eventually split up the Hyperloop track in two sections. And in that sense, you can create a complete Hyperloop network that in the end will make it possible to travel, for example, over a whole continent. Take Europe, for example, with the same ease as you can now travel with a metro in a city.
The nice thing about this magnetic levitation system that we've developed is that there's absolutely zero moving components in the track. So for example, if you have to do a lane switch, all you do is that the tube basically splits up, and statically the tracks also split up. And whenever the vehicle enters a switch, it either pulls itself to the right with its magnets, or it pulls itself to the left with its magnets.
Lane switching on traditional rail requires the physical movement of the rail. Even modern magnetic levitation tracks use lane switching techniques in order to transfer trains from one track to another.
And this is a very crucial element, because this is the thing that limits the capacity and, in the end, the usefulness of the rail network. Because the moment that a track is switching, that means that at that moment you are creating an unsafe environment for the trains behind it. So you need a lot of space between trains. But in a Hyperloop, because you have no moving components in the track, all the vehicles can be much closer to each other. You can achieve a very high frequency and basically have your vehicles moving and merging in and out of the network very much like a highway.
For now, though, Hart's physical testing has been limited by the size of their tube. Because the test track is only 30 meters long, they haven't tested this lane switch at speeds greater than 20 kilometers per hour. However, the company is working to build a new test site where it plans to increase that testing speed to 300 kilometers per hour.
We're now in a phase where we have proven most of the most important technologies in the test facilities that we already have. And we have also demonstrated the viability and the feasibility of a network. If you look at all the subsystems that it consists of, most of those are proven systems, already demonstrated in lab conditions. So we don't really believe that the technology itself is going to be the biggest challenge.
Because for all Hyperloop companies out there, actually building a Hyperloop system requires more than just a good product.
We're talking about the safety aspects, we're talking about integration into the environment, we're talking about the social aspects. Do people feel comfortable traveling in such a system? So it's about all these different aspects, and the complexity is really getting all the different stakeholders that are relevant and that do need to contribute to bring this to market, to get them all following the same roadmap.
order to help build this coalition of private and public interest in Hyperloop development, HART in 2018 partnered with other Hyperloop companies from Europe and Canada. The goal was to define, establish, and standardize the framework to regulate Hyperloop systems.
Right now we are working with all the Hyperloop developers together in setting up the first, let's say, structure for starting the standards drafting.
One of the most important goals for HART is interoperability, which is essentially making sure the different systems can communicate with each other.
Interoperability is so important because what we want to achieve is actually have this seamless travel experience. So you don't want to end up, for example, going from Madrid to Paris and then switching because you need to use a different technology to get, for example, to Amsterdam.
The idea being that as companies around Europe create the first commercial Hyperloop tracks between individual cities, one day those can all be connected to a larger network.
Everyone that believes that Hyperloop is a future transport system also realizes that there is a need to have this network because that's where Hyperloop thrives.
Hyperloop is such a huge project. It's definitely not something that you can do on your own or as a single company. So you need to do it with a lot of other companies. You need to have the governments. I think in that sense, the biggest challenge that we've encountered is to really get all the required parties together to take the steps in development and in commercial implementation.
HART's next plan is to build the European Hyperloop Center, an open testing facility which will include a 2.6-kilometer test track. And the company hopes to test travel speeds there at up to 700 kilometers per hour. Virgin Hyperloop is also racing to construct the first commercial Hyperloop route, with projects in various states of development in India, Saudi Arabia, and the United States. Recently, the company announced plans to build a Hyperloop certification center in West Virginia, which will include a 6-mile-long test track. Proving the technology here will be crucial if Hyperloop networks can find a home among infrastructure investments that the Biden administration hopes to make.
The idea that there's multiple Hyperloop companies, I think, is a redeeming aspect in the business. People really want to see something happen, so having multiple people move forward is good for that.
I was struck when Josh and Sarah rode the pod. 2 or 3 of the major outlets used the phrase, "We now have a new mode of transport." And although all of that technology had existed before those 2 human beings rode it, it was the moment at which those 2 human beings traveled that short distance down the tube that in popular imagination, Hyperloop became a mode of transport.
The metaphor I use with my team is that, the Wright brothers were first, but none of us fly on Wright Brothers Airlines anymore. If you don't continue to innovate, you're not going to be around, and so we'll continue to be at the forefront of building Hyperloop.
Back in 2013, Elon had an idea. I think the difference now in 2021 is some brilliant engineers have spent real time grinding out the details. And I thoroughly expect the next 3 to 5 years to be decisive.
week, how hydrogen can transform our energy usage. We'll look at why the universe's most abundant element could be a game changer in the climate revolution.
Hydrogen technologies are not new. They are used in other sectors. We use them in space, on our rockets, and we don't need the laws of physics to change to be able to use hydrogen on our planes.
From iron ore to green hydrogen, one of Australia's richest men tells us about his pivot to sustainable energy.
Let's take action. It's practical, it's implementable. Let's do it now.
Plus, the hydrogen revolution. We'll speak with the CEO of Italian utilities firm Snam about his new book and how green hydrogen could be competitive within 5 years.
Costs are coming down and people are waking up to the fact that it's the only way to decarbonize certain sectors.
From Bloomberg's global headquarters in New York, I'm Kaylee Lyons, and this is Bloomberg Green. It's a new year, so here at Bloomberg Green, we're highlighting new solutions in the fight against climate change. And one of those is as old as the universe itself, hydrogen. It's the simplest element around, but could well be a game changer when it comes to turning around our dependence on fossil fuels. Today, hydrogen is used in the chemicals industry to produce petroleum products. It's also starting to be used in steel production, an industry under a lot of pressure to decarbonize. But it has far more uses as well, from powering cars to heating our homes. And Bloomberg New Energy Finance sees a seismic shift in the sector in the next 10 years as green hydrogen squeezes out dirtier alternatives. So-called gray hydrogen dominates today. But as renewable electricity gets cheaper and more accessible, so will green hydrogen. In this week's edition of Bloomberg Green, we'll explore what this push into hydrogen means for tackling climate change. We'll hear from Australian billionaire Twiggy Forrest about his pivot from iron ore to hydrogen, and we'll also speak with the CEO of Italian utility company Snam about his book, The Hydrogen Revolution. But first, what are we using hydrogen for? And why does it actually matter? Christine Lee Edwards explains.
Hydrogen, the most plentiful element in the universe. On Earth, we find it mostly bonded to oxygen in the form of water, or in other gases known as hydrocarbons. Hydrogen gas, H2, burns hot and clean, making it an attractive tool in the race to net zero. But isolating hydrogen from other elements is no easy task. Today, the cheapest way to do this is via chemical processes that break up natural gas. This releases a lot of carbon dioxide. Another method is to use electricity to split water molecules in a process called electrolysis. Although there is no carbon byproduct, a lot of electricity is needed. And if this power comes from burning coal or gas, it negates the zero emissions goals of using hydrogen to begin with. Hydrogen produced in this way, powered by fossil fuels, is called gray hydrogen. If carbon capture and storage is used together with fossil fuels, then it becomes blue hydrogen. If nuclear power is used, it's called pink. And finally, green hydrogen is when it's produced via electrolysis and powered from renewable sources. This method is considered emissions-free. It's predicted that by the early 2030s, H2 made from renewables will be cheaper than that made from fossil fuels. But that hinges on the cost of electrolysis declining, which will be achieved through larger projects and an expansion of manufacturing. To be clear, vast amounts of H2 are already used today. Global production in 2018 totaled 117 million metric tons. This hydrogen is mostly used for its chemical properties, not as a source of energy, and very little of it is clean. Some sectors like steel could start using hydrogen for these chemical properties, replacing coal. Industries like cement and glass may also use hydrogen as a source of heat. Another advantage is its energy storage potential. It can be stored over long periods of time and used when more power needs to be added to the grid. It also could hold an advantage over batteries in heavy transport and shipping. The promise of hydrogen for energy has been around since at least 1874, when Jules Verne wrote about it in his book, The Mysterious Island. But the future of hydrogen will depend on policy. Countries with net zero targets, carbon pricing, and hydrogen strategies with investment mechanisms are likely to see the highest H2 demand.
That That was Bloomberg's Christine Lee Edwards explaining what hydrogen means for the energy transition. But how are businesses approaching the sector? Well, one of Australia's richest men is making a big play into hydrogen. Andrew Forrest, better known as Twiggy, made his fortune from iron ore, being the chairman, former CEO, and major shareholder in Fortescue Metals, one of the world's biggest miners. But after having made over $10 billion in profit from the metal in the last fiscal year, Twiggy wants to transform Fortescue into a clean energy company. He's been scouring the planet in search of investment opportunities in hydrogen and renewables. The firm plans to allocate up to 10% of its annual profits for green energy investments and is exploring projects across the globe, from Indonesia to Argentina. Francine Lacqua caught up with Twiggy Forrest.
There's only one type of clean hydrogen, all the rest is dirty.
Yeah.
That is green. If you just say green hydrogen is clean, the rest is dirty, then you've actually nailed it. And, you know, anyone else who produces any other rubbish, any other argument, just look them in the eye and say, why is global warming accelerating if anything you're saying is true? And then you'll know, actually, it's greenwashing.
Yeah, but there's a lot of greenwashing because I keep on being told it's a transition. We can't just, make the transition at a click of a finger. So what are we doing wrong? What can we do better?
I don't remember the personal computer having to transition the typewriter. I really don't remember that. I don't remember the smartphone having to transition the pocket calculator and the old landline. You know, its transition line is complete rubbish. The lie got put to it 2 days ago when JCB, a really loved British company, every right for the country to be proud of JCB, and Fortescue, holding a bit of a similar reputation, fantastic track record, everyone's been super well from Fortescue, huge balance sheet, super strong. When those two companies got together and agreed a $7 to $9 billion US agreement per annum, right, then that's a real wake-up call to say, hang on, green hydrogen is obviously commercial now. You know, every other form of fossil fuel hydrogen, you know, it can compete with it on price, it can probably lose on price, but what we know, it is cooking the planet. And only green hydrogen, zero methane, zero carbon in the supply chain. Don't worry about the molecules in the supply chain.
But at the moment, we're not even phasing out coal, if you look at the G20 communique. So we have a long way to go to talk about only using green hydrogen.
Yeah, so look, I have a call, which I'd like to make now, that the world should not fund any more coal-fired power stations, coal mining projects, ever. We should wind them down as quickly as possible because they are cooking the planet just like grey and blue hydrogen is cooking the planet.
Yeah.
You know, hydrogen, which is not made from renewable electricity, is releasing 10 to 16 times more carbon, let alone the methane, which is worse, than it is hydrogen. So we've just got to stop doing things which are self-harming under the guise of greenwashing.
So why are leaders so slow? Even if you look at the appetite for ESG investments, they're growing exponentially, so are emissions. So where are we allocating capital?
Okay, so take the recent G20. There's probably a reason why there wasn't strong action coming out of the G20 because people were not aware that major transactions between large companies were taking place now on green hydrogen. That actually this pollution-free all the way to the supply chain fuel is now being transacted at multi-billion-dollar scale. If they'd known that, I don't believe any sovereign leader or any energy minister or climate change minister could not take ultra seriously that green hydrogen is now here to stay. It's broken through. History has been made. It will never go back.
Okay, what is the one thing that you would tell leaders today and business leaders? How do we transition faster than what we are now because we're at real risk of missing our targets?
Oh, so that's really simple. You stop funding, you stop subsidizing, you stop using money into fossil fuels. It could be carbon sequestration, it could be fuel rebates, it could be anything. Hundreds of billions of dollars getting ashed while we ash the planet on fossil fuel subsidies. Because we haven't had that renewable electricity, we haven't had that green hydrogen, we've kind of been pushed down. It's all sorts of excuses. Oh, it'll never be commercial. It'll never be supplied in the quantities we need it. You know, blah, blah, blah. Now we know, let's take action. It's practical. It's implementable. Let's do it now.
okay, if we do it now, is there going to be a shock to the energy system? Is there going to be a shock actually to economically? And is it worth, not talking about transition, just going from A to B?
Yeah, it's a fantastic question. A to B is the solution. Let fossil fuels do what fossil fuels do. Just burn their coal, burn their oil, burn the gas. At least they're pumping up carbon and methane into the atmosphere, honestly. Well, not that honest, because they don't measure methane, which is 90 times worse than carbon. But at least the carbon is being done honestly. Encourage the green hydrogen sector to come in really fast. Okay, it's there. There's renewable power all over the world. We now know how to make electrolyzers much cheaper, like 25% of the original cost. We know how to do that now. We don't have an excuse to get into it.
Does it need to be cheaper than oil and fossil fuel for it to be viable worldwide?
Well, right now it is. Okay, so let's just swallow that bit of financial data. Right now it is cheaper, and it's getting more cheap. It's the only fuel you know
Mr. Force,
which is declining in value.
You don't have enough of it, right, to power the world?
Yes. That's only because we haven't had policies to support it. If we had policies to support it 5-10 years ago, it would be everywhere. You'd see the global warming budget start to come down.
Yeah.
Now, we've got 5 or 10 years to make a huge difference. I need policy leaders all over the world to appreciate now, okay, big business is transacting with green hydrogen in multi-billion-dollar agreements. We now know it's here and it's here to stay. Let's spread it everywhere.
Coming up on the program, the hydrogen revolution. We'll speak with the CEO of Italian utility firm Snam about his new book and why he thinks green hydrogen will be competitive in just 5 years. Plus, how are airlines working to become more sustainable? We'll look at how Airbus plans to step up in the climate fight. This is Bloomberg Green. From Bloomberg's world headquarters in New York, I'm Kaylee Lines, and this is Bloomberg Green. What will the world look like in 2050? Will global temperatures have stabilized, electric vehicles be abundant, and solar and wind power homes around the world? According to Marco Alvera, the CEO of Italian energy company Snam, that vision of the future could be a reality. And he says that hydrogen will pave its way. As he tells it in his new book, The Hydrogen Revolution, Alvera's moment of reckoning came in November 2018 when he tasked the Snam Scenarios team with studying how Europe could reduce its CO2 emissions to zero by 2050. Looking through the results of the study, Alvera said he was struck by how much hydrogen was in Europe's energy mix by that year. Beyond the abundance of hydrogen, the SNAM model also predicted that it would be the cheapest form of decarbonized energy for many sectors, and that it could be cheaper than today's prices for oil, coal, and nuclear power. Our Maria Tadeo spoke with Alvera at COP26.
It's happening all very fast. We see the cost of hydrogen coming down a lot. Hydrogen will play a big role in the energy mix. I don't know if it's going to be 15 or 25% of a fully decarbonized energy system, but it's going to be big. Costs are coming down, and people are waking up to the fact that it's the only way to decarbonize certain sectors, the so-called hard-to-abate sectors.
And you say it's the only way and the costs are coming down. Where do you see prices moving? Because a lot of the reticence at times has to do with the pricing, that some argue, well, it's still not the cheapest option on the market.
So when I was first working in hydrogen in 2004, it was costing $1,000 per megawatt hour. 2010, 600. Today, 100, and we see it going down to 50 in 5 years' time, and to going down to $25 per megawatt hour in the next 10 years or so, which is a quarter of where it is today. That's really because renewable energy, and we're talking green hydrogen here, renewable energy costs are falling, but the cost of making the electrolyzer, which is the kit that you use to convert solar or wind energy and water into hydrogen, the cost of this kit is falling a lot because it doesn't really exist on an industrial scale. So as we build up capacity, we industrialize it, we standardize it, and we squeeze costs out. That's really the cost trajectory.
And for that, of course, you need demand, however, for governments and also institutions to kind of buy into this idea that it is the future and we want to invest and create infrastructure. What are they telling you? When you speak to governments, when you speak to officials, are they keen on this?
They're very keen. So the Department of Energy shares our view in the States of getting to below $1 a kilo, which is $25 a megawatt hour. The European Union has a hydrogen strategy, which is very clear, and several member states have the same. Chile wants to export a lot of hydrogen. China's big on hydrogen. Australia's very big on hydrogen. Japan is blending already hydrogen. So I would say the world is now really focused on this because it's the only way to store energy for a long period of time economically is to convert it into either a liquid or a gas.
And of course, you talk about the price, but the other big component is the volume. You know, how big can you go? Where do you see that on a time scale?
So wherever it's sunny or windy, you can produce very cheap hydrogen eventually. And so compared to oil and gas, which are concentrated in few parts of the world, it's going to be very democratic from that point of view. So every sunny place, every desert, every ocean wind can be turned into hydrogen that we can put on ships, in pipes, and really start trading it around the world. So it's going to happen a lot faster than a lot of people think.
So, and when you say a lot faster, what is that in time?
As I said, $50, which is essentially oil parity within 5 years. And then, depending on how quickly we ramp it up after that, we could get to $25, which is coal parity before the end of the decade.
And in big scale.
In big scale, because once you get to coal parity, that's the only way we're going to get China and India to stop burning new coal. We have businesses in China and in India, and I see a lot of hydrogen development, a lot of renewable development in both countries. The India announcement was incredibly strong on 2030. Some people were upset about the 2017 net zero deadline, but when it comes to 30, he announced a big, big commitment to get to 50% renewables.
Were you surprised by it?
I was surprised that they would make it so explicit, and even the net zero is a big thing for them. And so I think it will happen faster than 2070 because of the falling cost of renewable and hydrogen. India's burning 80 gigawatt of oil, of diesel, to keep the lights on. So there's an immediate opportunity there, and we're very interested in working that country.
And with regards to China, perhaps the fact that we haven't really seen them active, I guess the diplomats are working on this, but we haven't really seen the leadership.
It's going to be technology, it's going to be industry. I think China has committed to a net zero, which is very important. At the G20, China was clearly behind the 1.5 degrees. So I think a lot has been achieved between the G20 and COP, and I think what's really important is to see in the coming years how quick it's in our hands to make part of this happen in 5 years, or it could otherwise happen in 15, 20 years. It's about building the project. The capital is there. We saw how many trillions of dollars are already committed. What's missing is really the projects, and that's where companies like us step in.
Marco Alvera, CEO of SNAM there, speaking with our Maria Tadeo. Let's turn now to the aviation industry. It's a big contributor to global greenhouse gas emissions, and it's under pressure to change that. In October, the International Air Transport Association, a trade body representing airlines, approved a target of achieving net zero emissions by 2050. To achieve that, many airlines in the US and Europe are looking to buy sustainable aviation fuel made from renewable sources like used vegetable oil. Initiatives like these are pushing plane makers to come up with some radical new aircraft that will eventually cater to our growing appetite for travel without hurting the environment. We took a look at how Airbus, the world's #2 aircraft manufacturer, is stepping up to the challenge.
How long until we can fly emission-free? Airbus says it's more confident by the day it can be done by its 2035 target. Airbus's CEO spoke about its ambitions for hydrogen-powered planes at the company's summit in France.
The physics works. Hydrogen technologies are not new. They are used in other sectors. We use them in space on our rockets, and we don't need the laws of physics to change to be able to use hydrogen on our planes. So every day we become more confident, but we think we need to have a plane, we need to have the right fuels, the hydrogen available in the right quantity at the right place at the right time, and we need the regulations to be ready. So we really need the work and the collaboration of many people around the globe to make it happen on time.
But it could be a long wait until green passenger jets go mainstream. Larger aircraft with more than 150 seats are not expected to feature globally until about 2050. That means manufacturers and airlines today are under growing pressure to ramp up short-term innovations to cut their carbon. In the long term, meeting the ambitious plans for so-called green hydrogen means building a giant industry almost from scratch. To make that happen, British airline EasyJet is among those saying governments need to get involved and fast. Aviation's emissions over the last 3 decades leading up to the pandemic grew by about 80% to over 1 gigaton, and that's projected to double by 2050. According to Bloomberg NEF, about half of the airlines with the largest global market share have set net zero targets by that same date, nearly 3 decades away.
Coming up, from blue sky projects to the bottom line. We'll speak with our Bloomberg NEF expert Meredith Annex and dig into their models about how hydrogen fits into the future energy mix. This is Bloomberg Green. From Bloomberg's world headquarters in New York, I'm Kaylee Lyons, and this is Bloomberg Green. Now let's bring in Meredith Annex, our Bloomberg NEF hydrogen specialist, to talk more about how hydrogen could change the energy landscape. So Meredith, what place do you think hydrogen is likely to have in the future energy mix globally?
Hydrogen's this incredible solution for us as we look to decarbonize because it's a perfect solution in areas that are hard to electrify. So where we like to think about hydrogen playing a role, it's in things like heavy industry, especially where you need a feedstock as well as energy source. and in things like dispatchable power, long-haul transport, maybe even shipping and aviation.
That sounds great that it can be used for such diverse industries. At the end of the day, though, how much is this going to cost?
Well, that's the amazing thing about hydrogen, because depending on how you make it, it can actually see significant cost declines in the future. So when we're talking about clean hydrogen, we usually mean green hydrogen produced from renewable electricity. And in that case, your hydrogen is almost as cheap as the renewables that are used to make it. So if you're in a place with really good renewable resources, you'll be able to have cheaper hydrogen. But even in places with less good resources, we think that hydrogen can be cheaper than $1 per kilogram, which is the price of unabated hydrogen today, and around $8 per million BTUs for those who prefer to think in energy units. And that can be achieved anywhere in the world by 2050, we believe.
All right, so let's talk about kind of the pros and cons list. I don't know where cost fits into that, but what are the advantages to hydrogen over other renewables, and then what are the drawbacks?
Yeah, main advantage is the fact that hydrogen can serve roles that electrons struggle with. And that's things like seasonal storage, for instance, or just anything where you need storability, where electrons are harder to store, hydrogen is going to be easier. That also leads to a downside, though, because hydrogen is less energy dense than the usual things that we use for storable energy today, like coal or oil or natural gas. So you will need more volume of storage to handle the same amount of energy.
Let's talk about the viability as well and how it may differ in different geographies. What is your view on that?
Yeah, so for green hydrogen, again, from renewable electricity, really places with the best renewable resources, things like Latin America or the Middle East, even Southern Europe, have really, really good potential for producing hydrogen. And then when you're looking at blue hydrogen, which is produced from natural gas or coal with carbon capture and storage, we do see that becoming more expensive than green hydrogen in the future, especially as renewable electricity costs come down. But that can be a viable option in places like the US Gulf Coast or Russia, where you've got good geological storage for the carbon, as well as ample natural gas that's quite cheap.
All right, great breakdown. Thank you so much to our Meredith Annex, our Bloomberg NEF hydrogen specialist. And of course, you can get more from the Bloomberg NEF team on the terminal and online. And they've recently done a podcast called Hydrogen 101 as part of its Switched On series. So from iron ore titans pivoting to cleaner energy to talk of a hydrogen revolution, that's it from this week's edition of Bloomberg Green. We'll be back next week with a deep dive into the state of electric vehicles. And you can keep the conversation going by following us on YouTube, Instagram, and Twitter @Climate. I'm Kaylee Lyons from Bloomberg's World Headquarters in New York, and this is Bloomberg Green.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a developing story. Stocks lower across the board, but first we have headlines from Atlas Worldwide Holdings. An Apollo-led group is in advanced talks to buy Atlas Air. This according to Dow Jones. Shares of Atlas surging now by 10.1%. Boeing, meanwhile, gaining ground on a double case of good news today, giving the plane maker a much-needed lift after months where few breaks went its way. Boeing, member of the Dow, rallying by 6.2%. Stocks lower, though, across the board, with the S&P now down by 21 points, a drop of 0.5%. The Dow is down 101, a decline right now of 0.3%. The Nasdaq Composite Index lower now by 50 points. That is a loss right now of just about 0.4%. 10-year yield 2.61%. We do have the 2-year right now yielding 2.90%. Spot gold up 0.2%, 17.69 the ounce, while West Texas Intermediate crude is declining by 5.3% at 93.45 a barrel. Well, as for the economic backdrop, Laura Rame is chief economist at FS Investments.
Right now, Q3 GDP is actually shaping up to be positive. A small positive, but I think we really need to wait. There's another shoe out there to drop, and it's the jobs. And the Fed probably said that about 10 times, that to them, they're really going to continue to address inflation primarily until they see problem with the jobs.
And again, we do have crude down by 5.4%. Poor manufacturing numbers across the globe, fueling concerns that a global slowdown may sap demand. Oil stocks lower. ExxonMobil down 3.3%. BP's ADR is down 1.8%. Chevron down 2.6%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Live from the Bloomberg Interactive Brokers studio in New York. Good afternoon to our worldwide audience on radio and watching us on YouTube. It is Monday, August 1st, 2022. I'm Tim Stenovic. Carol Masser is off this week. In for Carol today, though, is Bloomberg TV anchor and a markets correspondent, Kriti Gupta. Kriti, the question of the day, is the bottom in?
Oh, you know I have so many thoughts on this, Tim.
I know. I heard you take both sides of this earlier.
I did, because I had to be neutral. I had to be.
Okay, we're going to tackle this question throughout the day today. We got some economic data this morning that kind of says we're starting to see economic growth slow. Mike McKee is going to weigh in on that in just a minute. Also, Elon's antics are starting to get to more than just regulators. And in the magazine, one of TikTok's biggest stars roasts dudes for misogyny and racism. And remember all of those celebrities who endorse crypto projects and platforms? Well, we're talking Tom Brady, Matt Damon, Reese Witherspoon, and more. Check in on the price action since these celebs spoke up. It's not that pretty, Kriti. We're going to do a deep dive on that a little bit later.
Yeah, you'd think that the price would go up after Tom Brady endorsed it. Not the case.
Not the case. He only has so much control, right? We're also going to check in with a private equity firm that focuses on consumer brands. We're going to talk gap years before college with the CEOs of Global Citizen Year and more. First up, though, let's get to the Market Drivers Report. Joining us in the Bloomberg Interactive Brokers studio right now is Michael McKee, International Economics and Policy Correspondent, along with markets reporter for Bloomberg News, Abigail Doolittle. Micah, I want to start with you because we got some eco data this morning, ISM data about factory activity, measure of production. I don't want to get lost in the numbers here, but big picture, what's it telling us?
Well, I'll start by answering the question you asked, Kriti, is because I don't have to be neutral. I'd say the bottom is not in. The Red Sox can lose a lot more games.
Oh, okay. You're just talking. You're just talking about
the way they're going.
I'm like, I was like, where's he going with this? What does he know that we don't know?
But the ISM, and you and I were talking just before we went on the air, basically is telling you that the economy is slowing down, but it is not in recession. They do calculations. I mean,
this indicator has been around for 50 some odd years, so it has a good history to it. And they say that you got to be below 48.7 before you're
48.7, and below 50 is
no
when things are
growing.
in contraction.
Yeah, the
right?
manufacturing is contracting, but the economy is not, according to their calculations. They say that today's number, the 52.8, is equivalent to a 1.4% increase in GDP. Now, that's on the manufacturing side. The rest of the economy we'll find out more as the week goes on, because we'll get the services number later on. We get tomorrow car sales. We'll see how much they have slowed because of rising interest rates. We know housing has slowed. So things are going along as the Fed would like. The question is, do they go too far? When do they go too far? When have they gone far enough? And unfortunately, there's no bright line. There's no way to tell, except looking at backward reading numbers.
Well, Abigail, hop on in here. Is the bottom in, as Tim asked? We'll ask you.
I don't know. Is she a Red Sox fan?
I'm sports agnostic, neutral, as you are, Crudy, on the markets. But on the markets, I would say the bottom is probably not in. Just from a technical standpoint, it looks like this nice bounce that we had in July. I think that it could extend a bit further. And typically, August and September are the worst months for the S&P 500. But I wouldn't be surprised to see the gains extend a little bit longer. But from a strictly technical standpoint, it seems as though the S&P 500's likely to go to a minimum of, I would say, 3,000. You could make a really dour case for below that level, and again, strictly in technicals. But when you think about the fundamentals to match it in terms of this recessionary environment, whether you call it a true recession or just sort of a potential recession or a recession to come, along with the Fed hiking, understanding that bond traders are suggesting that the Fed will be cutting next year, which is sort of baffling to me. I think that there's a lot of headwinds for investors to continue to contend with.
So, Abigail, what is actually moving the market today? Is this simply just a pullback from the gains that we saw, I want to say, 3 out of the 5 days of last week?
I think it has mainly to do with Apple, which is the biggest market weight. So volume today is actually above average. So the selling action is for real, for a lack of a better way to put it. It's not just taking advantage of a weak tape. That said, the tape has been pretty weak recently in terms of volume. So to be above it doesn't mean so much. But Apple, with this 4-part bond deal, and we just had a redhead come out saying that it's going to be a $5.5 billion deal. What's so interesting is the last 4 times that they've done this over the last 2 years, the stock has ended up more than 1% at the end of the day. Right now, the stock is close to its lows, down about 0.9%, and as the biggest market weight, that I believe is what's really driving the market sentiment. Because when Apple had been higher earlier, that's when you had both the Nasdaq and the S&P 500 higher. Amazon, this is pretty interesting. Pete Dioteris had pointed this out. I think up 28% in July. Earlier today, it had still been on up sharply at more than 1%. Now it's up modestly, but you just have some of this big tech pulling in, and it seems to be dragging the markets.
All right, Michael McKee, come back in here and talk a little bit about what you're seeing with economic data this week, because you mentioned that, we're going to get more this week. We've heard some Fed speakers in recent days seem to kind of dial back the rhetoric a little bit about, in terms of, I would say talk down the market a little bit. Well, I'm thinking of Neil Kashkari.
We came out of the Fed meeting last week with Jay Powell saying we're going to be data dependent and we're going to take a look at everything between now and September 27th. And the market read that as, we're going to back off, and there's a turn. And then, of course, stocks and everything started to go up. I don't think Fed officials are pushing back so much as saying, no, that's not what we meant. We meant we're going to be data dependent. We're going to see what happens. This week, the big number is going to be obviously jobs, because the jobs market is what has kept the Fed going and feeling like we won't have a hard landing or have a way around getting to a hard landing.
JOLTS tomorrow before we get to jobs on Friday?
Yeah, JOLTS tomorrow will show us whether or not the total number of jobs openings that we have has shrunk at all. They point to that saying there's 2 jobs for every unemployed person. So as long as that's the case, and then we'll see on Thursday jobless claims, are those still rising and by how much? There's some seasonal factors at work in July that theoretically should start to go away, and we'll see if people are being laid off.
stuff.
All right. Both of you given us plenty to talk about, and we really appreciate it. That's Michael McKee, International Economics and Policy Correspondent for Bloomberg News. He's with us in the Bloomberg Interactive Brokers Studio. Joining us from the newsroom, Abigail Doolittle, Markets Reporter for Bloomberg News. Let's get now to Washington, D.C. for the latest world and national news. For that, we go to Nancy Lyons. Hey, Nance.
Thanks, Tim. House Speaker Nancy Pelosi is expected to land in Taiwan Tuesday night local time. We get details from Bloomberg's Amy Morris in Washington.
Taiwan's pro-ruling party newspaper, The Liberty Times, cites unnamed sources saying that Pelosi plans to land Tuesday night and meet with lawmakers on Wednesday. Still, the newspaper says the U.S. and Taiwan are preparing for any last-minute changes. China again warned that its military would take action if Pelosi visited Taiwan, saying the visit would gravely undermine ties with the U.S. As to what the Army will do, China's foreign minister says they'll wait and see if the visit actually happens. In Washington, I'm Amy Morris, Bloomberg Radio.
Senate leaders from both parties are racing to approve Finland and Sweden's bids to join NATO. They want to do that before their August recess begins this week. The NATO expansion is popular on both sides of the aisle, but the bids from the two Nordic nations are competing with other bills for valuable Senate floor time. One of those bills is the Inflation Reduction Act that was brokered last week between Senate Majority Leader Chuck Schumer and Senator Joe Manchin. Republicans are united against it, like Pennsylvania's Pat Toomey, who says he doesn't think it lives up to its name.
I've been asking myself, what does Joe Manchin get out of this? And of course, his answer is, we're going to streamline the permitting process. Oh, really? We've seen no bill. We have no text. They're not putting it in this bill.
Speaking with Bloomberg's David Weston, Senator Toomey calls the bill a tax increase on manufacturing, and he also calls it corporate welfare for clean energy. Global news 24 hours a day, on air, and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
Thank you so much for that update, Nancy Lyons. Tim Stenovec and Kriti Gupta live in the Bloomberg Interactive Broker Studio in New York. Kriti, among the most read on the Bloomberg terminal. By the way, it's great to have you here this afternoon.
Thanks.
I was joking around with you earlier because this show takes a lot of prep. So a big shout out to our team who makes it as easy as possible. Mm-hmm. But also, we spend a lot of our morning preparing for it. As I was preparing this morning, I kept looking up on the TV and seeing you on air. And all I could think of to myself was, okay, if she's on air anchoring these shows, when is she preparing for my show?
This is a good question.
Okay.
I'm going to dodge it.
Okay. I would say, here's how I would answer it.
I promise you I'm not winging it.
Okay, here's
Only
how
a little bit.
Here's how I would answer it. What you could say is that, all the anchoring that you did on TV today that you do every day prepares you for this. How's that?
Yes, that's what I meant to say.
All right, because you've had a lot of airtime today, and I think I also listened to you on my way in this morning. Anyway, all that to say is this is the time of the show where we talk about some of the most read on the Bloomberg terminal. One of the ones really getting our attention today is a blunder at Barclays that is actually giving some burned Peloton holders a 1,200% boost.
A 1,200% boost.
Yeah,
that is insane.
So the bank revealed on Monday the list of securities it's going to buy back at their original price as required by regulators due to a paperwork error. Barclays' $17.6 billion program, it's set to effectively rescue many bondholders from the market plunges over the past year. Let's go to this most extreme example here. $1.8 million note tied to Peloton Interactive, whose shares have cratered since its pandemic heyday, bringing the note's market value to just under 8 cents on the dollar. If the original holder were to give the notes back to Barclays, indicative proceeds would amount to 102.1 cents, which would be an increase of nearly 1,200% on what they would have been worth.
Okay, but 102.1 cents.
Yeah.
So this is like saying, like a penny stock rally 1,200%.
Okay, but it's better than 8 cents on the dollar.
That's true. That is true. It is an improvement. I will give you that.
All right, much more coming up in just a few minutes. We're going to be joined by our friends at Bloomberg TV for our kickoff to the close. You're listening to Bloomberg Business Week on Bloomberg Radio.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We're looking at a down day on Wall Street, red on the screen right now. The Dow, the S&P, NASDAQ, all trading lower right now. The S&P is down by 0.3%, declining 13 points. We've got the Dow lower by 53 right now. That is a drop of about 0.2%. NASDAQ also on the minus side, down now by just about 18, drop there of 0.1%. The 10-year yield, 2.61%, 2-year at 2.90%. Crude oil, big story today. Crude oil selling off down 4.9%, 93.84 barrels. So again, recapping, S&P down 14, down by 0.4. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Kickoff to the close. Bloomberg's comprehensive cross-platform coverage, bringing you insight on what to watch ahead of the U.S. market close, starts right now.
In for Carol Master. Welcome to our TV colleagues, Caroline Hyde, Taylor Riggs, and Katie Greifeld, here to walk us through the audience across TV, radio, and YouTube to what to watch as we head toward the closing bell. And Caroline, you know, looking this morning at the S&P 500, I was thinking, okay, is this rally that we saw in July continuing into August? It certainly looks like it is, but we're seeing the S&P lose a little bit of steam here.
Risk aversion, and I think front and center is the China-US relationship, is Nancy Pelosi's visit to Taiwan, is politics, basically. But we're not dramatically falling. We're still off just by 0.4% on the S&P 500, Tim. But it is a down day, and after such an amazing performance in July, it takes us slightly by surprise. Volumes are higher by about 9% on the S&P. The Nasdaq down by about 0.3%, and similar moves for the Dow, which is also seeing higher volumes. You're looking at the Russell 2000 trying to be flat on the day, at least, Taylor.
Caroline, I love that you take us through the majors. I'm going to kick us off and take us through some of the key things that we really want to watch. And for me, I know that you start within the equity markets. I'm, as always, going to take us back to some of the bond markets that I do as well. Katie, for me, it's all about the debt sale. This is cash on the balance sheet from Apple, launching the $5.5 billion. We're hearing that maybe on the long end, that 40-year maturity, you're looking at a spread of just over about 150 basis points to treasuries. But it is a hoarding of cash and then using some of that cash to fund buybacks and dividends. And that, for me, is a really sort of interesting signal that we're looking to take from that market. Or as Kevin Nicholson told us, is Apple just in a league of its own?
It almost feels like it is in a league of its own. I mean, it's almost a treasury, right? It's backed by the full faith and credit of Apple. It's just got so much cash on the balance sheet. Amazing.
Yeah, interesting to see Apple move lower on a day like today. Abigail Doolittle reminded us that typically when Apple has done this in the last few years, we see Apple stock move higher. I've got my eye on an article that Bill Dudley wrote in a Bloomberg Opinion. He is, of course, a former president of the Federal Reserve Bank of New York, now a Bloomberg Opinion columnist, senior advisor to Bloomberg Economics. He writes in Bloomberg Opinion today that market speculation about a pivot is overdone and counterproductive. Here's what he wrote, quote, inflation is too high, the labor market is too tight, and the Fed must respond most likely by pushing the economy into an actual recession as opposed to the 2 quarters of minor GDP shrinkage that has occurred so far. Wishful thinking in markets only makes the job harder by loosening financial conditions and requiring more monetary tightening to compensate, Taylor. Bill Dudley, former president of the Federal Reserve, says essentially wishful thinking is where we've seen the rally come from.
And Tim, really hard to glean comment on one day of markets, but at least for today, you take a look at the markets and maybe sort of understanding and putting into perspective the big rally last week and understanding that yes, inflation still is a 9 handle, and yes, it's still not under control, and maybe you do need to still have that aggressive Fed to get that under control, Caroline.
And from the previous head of the New York Fed to the politics that is, of course, consuming one Nancy Pelosi right now, I really want to talk about not just what's happening in the US economy, but also what's happening geopolitically at the moment, because we are seeing Chinese stocks falling. We're seeing the Chinese renminbi or yuan, whichever way we want to call it, the currency down against the US dollar, which is notable given we've actually got the US dollar down against most G10 peers today. And we're looking really at a 2.7% decline. I'm doing this for Carol. She's not here. She always does, of course, the Golden Dragon China Index and or the K-Web, whichever one you want to be looking at. But really, this does show that we are taking some chips off the table when it comes to the relationship, when we're worrying about what it means for future dialogue, when we do have the most senior person from the US government going to Taiwan in 25 years, Tim.
Yeah, you have to go back all the way to 1997 when you saw then Speaker of the House Newt Gingrich actually make his way to Taiwan. So it's been quite some time until you've seen, since you've seen a US official of such a high profile make a visit, Kriti.
Yeah, and it's going to be crucial, especially when we talk about how this actually feeds back into the stock market story at a time when we're talking about, is the bottom actually in? Take a listen to what Matt Hornbach over at Morgan Stanley said about what we need to see that rebound.
It's going to be important what we see in the labor market. It's going to be important what we end up seeing in the PMI numbers between now and September. Ultimately, in order to get the market to start moving higher in yield again, you're really going to need to see growth data rebound.
And it really comes down to the economic data. We're going to get a slew of it this week, and specifically those payrolls numbers, a lot of focus on there, specifically when we're talking about a super tight labor market.
Yeah, what will JOLT say as soon as tomorrow? What will the amount of spare jobs there are for each unemployed person at the moment? It had been about 1.9 for every person out of work. There's 1.9 jobs out there for the taking. And this, of course, is why Fed Chair Jay Powell has said, look, this is why the US can take such rampant rate rises. It's interesting that we'll get that data, the jobless claims, and indeed then non-farm payrolls, Katie.
So still a lot to work through. With all this uncertainty that you're seeing, this is why I'm focusing on the Schwab U.S. Dividend Equity ETF. Seen over $8 billion in inflows so far this year. Only seen 5 days of outflows, which really says to me, even with this big rebound that we're seeing, I mean, people are still nervous. They're still uncertain. That's why you're seeing people really search for that sort of steady income stream.
We're hearing that too, right? That within sort of, Tim, this risk on appetite, still a little bit of that defensive nature underway.
Yeah, it's that defensive nature. Remember, we've seen this on the tech side. We've also seen this on the consumer staples, on the REIT side as well, even utilities. I wonder how much of dividends is at the core of the new defensive.
And indeed, whether or not we'll see bond issuance to be subsidizing at least buybacks and gives to the investor out there. I thought also the bond trade was an interesting one today for thinking about Apple on one side and how hard Carnival is falling as it does, of course, its convertibles today.
Hey, a nice preview for one of my decliners. That is going to do it for our cross-platform coverage for now. We'll be back in just a little bit. Don't miss Beyond the Bell at the market close, 4 p.m. Wall Street time.
You're listening to Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Kriti Gupta. We're live in the Bloomberg Interactive Brokers Studio in New York. Okay, a lot to think about, Kriti, as we do head to the close on this first trading day of August. But, up to now, we're seeing the S&P 500 down close to 0.4%, but we still got close to 90 minutes to go.
And as we know, anything can happen in these afternoon kind of couple of hours. What's interesting, though, is, there's so much to digest.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenovec and Kriti Gupta. We are live in the Bloomberg Interactive Brokers Studio in New York. In just a couple of minutes, we're going to be speaking with Ira Boudouet, global business reporter for Bloomberg News. He and Kyle Stock have a great story about what people think of Elon Musk and how that affects Tesla and their, idea of actually buying one of these vehicles. We're going to dive into that in just a few minutes. First up, though, Charlie Pellet, we got less than 90 minutes to go.
Indeed, we're looking at red on the screen right now, Tim, with the Dow, the S&P, and NASDAQ all trading lower. Investors are digesting fresh comments from Federal Reserve officials and data showing slower growth in the manufacturing sector. Julie Beal is portfolio manager at Kane Anderson Rudnick.
I think what we have to remember is that the Fed tried to be pretty cute about inflation, calling it transitory. And now it's just giving us a lot of mixed messages. And I think the reason for that is we just don't know how the data is going to turn out. And so they need the breathing room, they need the flexibility to be able to make changes as the data comes in. And I think the problem for investors is we just want a lot more certainty than I think is really available to us right now.
S&P 500 index down 14. That is a drop of 0.4%. Dow Jones Industrial Average lower now by 59 points, down by about 0.2%. NASDAQ is lower as well, down 26, a drop there of 0.2%. First trading day of the new month, the 10-year yield 2.60%, the 2-year yield 2.90%. Spot gold up 0.2%, 17.68 the ounce, while West Texas Intermediate crude is down 4.8%, 93.99 a barrel on WTI. PepsiCo is going to pay $550 million for a stake in fitness energy drink maker Celsius Holdings as part of a long-term strategic distribution agreement. PepsiCo shares are up now by 0.9%, Celsius surging by 12.1%. Again, recapping, stocks trading lower, S&P right now down by 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Tim Stenovec and Kriti Gupta. We're live in the Bloomberg Interactive Broker Studio. Kriti, oftentimes the writing from our team at Bloomberg News is so good that I just read directly from it for an intro. Today is no exception to that. So before it was reported that Musk had an affair with Sergey Brin's wife, which he's denied, before his slipshod deal, then no deal to acquire Twitter, before the revelation that he fathered twins with an executive at his brain interface startup Neuralink, before SpaceX fired employees who called him a, quote, frequent source of distraction and embarrassment, before an article said SpaceX paid an employee $250,000 to settle a claim that he sexually harassed her, allegations he's called untrue. Musk's behavior was putting off prospective customers and perturbing some Tesla owners. These are the words from Ira Boudouet and Kyle Stock. Ira is joining us now. He's global business reporter for Bloomberg News. He joins us on the phone from New York City. Ira, really eager to chat with you about this, and thanks so much for joining us on this. So what can you tell us about how Elon Musk's behavior is connected to what once, Tesla superfans now think of the company?
It's interesting. There's a subsection of people who either have soured on him or kind of never liked him in the first place. And what's hard to measure in all of this is how that impacts Tesla and its sales, because you're talking about something people are not doing, which is buying Teslas. He's trying to figure out, but Kyle and I saw it bubbling up. There's enough of it on social media and just speaking with people in the course of our research. In doing stories, and then I found actually a couple of research shops that said, we hear this all the time from Tesla owners who say, look, and this is their job to do consumer research. They're like, one of those shops, Escalent, told us, we hear from these owners who say, I love my car, but I wish I didn't have to answer to my friends and family about Elon Musk's latest tweet. And so there's definitely a force in the market that is pushing at least some people away from Tesla.
But at the end of the day, Tesla it's an electric vehicle. It's green. It's supposed to be environmentally friendly. Does any of that offset the Musk sentiment?
I think so, yeah. And I think that's actually what sells them, that and the performance, right? I think what we're discovering kind of is that what people like most about Tesla is the cool things about Tesla: the range, the looks, the acceleration, the fact that it doesn't have tailpipe emissions, and that actually what they like least about Tesla is Elon Musk. And so it creates a lane for somebody to try to match all those other Tesla qualities without the antics of Elon Musk. And I think two things have happened recently that have sort of made Musk potentially more of a liability. One is that the Musk news cycle, which was not exactly slow in the first place, has just kicked into overdrive. And so he's in people's faces all the time. And the other is that other automakers have started to offer more competitive EV models, because in the past, if you wanted something like a Model 3, there was nothing else like a Model 3. And now you look around, there's a Ford Mustang Mach-E, there's a Hyundai Ioniq 5, there are models that are starting to do what check the other boxes that Tesla checks, and that's the risk with Musk now for Tesla.
Yeah, both of those two vehicles that you mentioned, Ira, are high on the list of vehicles that are of interest to people I know who want EVs. The problem, though, is availability of these. I mean, the Mach-E, my dad's been waiting more than a year to actually get his that, he put an order for in more than a year ago at this point. So does Tesla still have a little bit of an advantage because they are able to handle the supply chain pain so well?
Yeah, I mean, I think for all the EV makers right now, demand is ahead of supply. So stuff like this happening on the margins, where the public image of the CEO is maybe moving some buyers in their decision-making, is kind of irrelevant in the moment in the sense that none of them can fulfill all the orders that they have. Mm-hmm. But I think going forward in terms of who's going to win long-term in the mainstream market, this could actually be a very influential piece of the puzzle. So, and I think it's emerging that there are a lot of people who just, their next car is going to be an EV, and we talked to some of them, and they've crossed Tesla off the list.
Okay, well,
that's not it.
That's where I wanted to go. I'm so glad you brought that up, Ira. Tell us about some of the people who you spoke to and who Kyle spoke to for this piece, because you got a good cast of characters in here.
Yeah, I mean, the lead is a guy named Dennis Levitt. He's a 73-year-old out in California. He's got 4 Teslas. He's been buying them essentially since they first came out. He's got a couple Model S's, a couple Model 3s. Absolutely loves the cars. He describes himself as a Musk fanboy. And he's soured on Musk because of all the things that we mentioned in that long paragraph, and others. But he still is looking for a car to do for him. He's back in the market for an EV. He test drove a Lucid. He wants to look at others. And he's basically like, I would buy another Tesla, but because of Musk, now I'm going to shop the market. So that's kind of one example. Then we spoke with people who, like I said, there's a YouTube chef out in California also who said, my next car is definitely going to be an EV, and the only thing I know is it's not going to be a Tesla, basically, because I wouldn't take a Tesla if you gave me one, and then, similarly, there was a woman in Montana with the same approach. They've been starting the research process for a new car, and they're waiting for something that is not a Tesla that will work for them in Montana, where range is kind of key.
Ira Boudouet, global business reporter for Bloomberg News. Check out his story on the Bloomberg Terminal and online. Let's get to world and national news with Nancy Lyons. Hey, Nance.
Thanks, Tim. We're getting more indications that a stop in Taiwan is on the agenda for House Speaker Nancy Pelosi. Multiple outlets, including Taiwan's Liberty Times, as well as those close to the speaker, are all saying the speaker will arrive in Taipei tomorrow night and meet with lawmakers Wednesday. Bloomberg's John Liu reports Taiwan is the prickliest of a number of prickly issues in U.S.-China relations.
Presidents Biden and Xi spent 2.5 hours talking last week, much of that about Taiwan, a red line for China, something Beijing has made very clear they oppose a visit by Speaker Pelosi.
Again, that's Bloomberg's John Liu in Beijing. Senate Democrats are hoping to pass a tax and energy spending bill by the end of the week without the need for Republican votes. Republican Senator Pat Toomey of Pennsylvania spoke exclusively with Bloomberg Television today and says he would not support the Inflation Reduction Act, even if he thought it would reduce inflation.
I think the fact that they effectively undo one of the most constructive things we did in the 2017 tax reform, which is allow full expensing of CapEx, is going to lead to an economic slowdown.
Senator Pat Toomey speaking with Bloomberg's David Weston. One Democrat, Kirsten Sinema of Arizona, has yet to weigh in. She's opposed tax increases in past negotiations on the measure. The death toll keeps rising following extreme flooding in Kentucky. Governor Andy Beshear says 35 people are now dead, hundreds more unaccounted for. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much for that update, Nancy Lyons. Tim Stenovec and Kriti Gupta were live in the Bloomberg Interactive Brokers studio in New York. Here's an interesting story, Kriti, among the most read on the Bloomberg terminal. It's about Spain's body positivity ad being slammed for doctoring women's images.
Yeah, it's kind of a wild story here, but here's what happened. An ad by the Spanish ministry, which sought to combat sexist stereotypes about women's body, well, it quickly unraveled. Models said they did not consent to their images being used in promotion or how they were edited.
One of the women in the photo illustration accompanying the ad is criticizing the designer of the image for editing out her prosthetic leg. Another says her face was grafted onto another body.
Yeah, there's a lot going on here. And remember, let's put this into some context. This is coming within an era of a lot of people really speaking up for body image, and Spain is no exception.
Yeah, the Spain Women's Institute, a division of the Equality Ministry, said in an emailed statement, quote, "It wasn't aware that the women who appear in the images were real people and had commissioned an illustration without the use of the models."
It looks like the Equality Minister, Irene Montero, is now saying all bodies are valid. We have the right to enjoy life as we are without guilt or shame. That, of course, coming in a now deleted tweet.
The accompanying image featured a pastiche of models' photos, including a doctored version of an image model and motivational speaker Xian Green-Lord posted from a recent trip to Ibiza. In the advertisement, her white bathing suit had been covered with a floral design and her prosthetic leg had been replaced to hide her disability. Green-Lord raised concerns about her image being used in the body positivity campaign in her Instagram story. She did that back on July 29th. 2 days after the ad debuted, a friend brought the illustration to her attention, she said.
Yeah, and in an email, she said, "I'm still in shock over the whole situation as it took me so long to accept myself with my disability, so what they have done is very hurtful."
We're going to be digging into a story about what's happening on social media, what's happening specifically on TikTok when it comes to the way that people have been talking about women on the platforms. We're going to do that with Bloomberg Business Week editor Joel Weber and Bloomberg technology reporter Alex Barinka. They're going to be joining us in just a few minutes. This is Bloomberg Business Week. You're listening on Bloomberg Radio.
facts, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a developing story, and we have got a trading halt right now for Devon Energy. Devon is boosting its production forecast for the full year. Devon, of course, reports after the closing bell today. We'll have those numbers as they become available, but a trading halt right now. And again, the headline from the Bloomberg Professional Service, Devon boosting its production forecast for the full year. Last quote on Devon, 61.77. This is crude oil today tumbles. West Texas Intermediate crude down 4.9% right now, 93.76 a barrel on WTI. Stocks are moving lower. S&P down now by 17 points. That is a drop of 0.4%. We've got the Dow Jones Industrial Average lower by 0.3%, and NASDAQ down now by 36 points, a drop right now of 0.3%. 10-year yield 2.61%. The 2-year is at 2.91%. And spot gold up 0.1%, $17.67 a barrel. So again, recapping, trading halt for Devon Energy, oil selling off, West Texas Intermediate crude down 5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, a story featured in the new issue of Business Week magazine, written by Alex Barinka, technology reporter for Bloomberg News, is all about how one of TikTok's biggest stars is roasting dudes for misogyny and racism. Alex Barinka is technology reporter for Bloomberg News. She joins us from our Los Angeles bureau. You can see her on YouTube if you're watching us there. Also with us is Joel Weber, the editor of Bloomberg Business Week. He's with us right now in the Bloomberg Interactive Broker studio. So Joel, it's so funny. We're talking about a person named Drew F. Wallow. And, you know, we think about the power that people have with these platforms. She has got 7.5 million followers on TikTok. So it's fewer than Justin Bieber, but she's got like as many as Jimmy Fallon.
Almost as much as Jimmy Fallon. and yet, you know, not big. Maybe not a household name. And it just speaks to how well she owns TikTok. And on top of that, we're working on a special issue this week. You're going to see some more stories that are going to be thematically linked to this one. This was the first out of the gate. And it was also just totally caught our attention from the moment that Alex flagged this as an option, because Drew, in the aftermath of the Supreme Court decision, that basically, you know, upended Roe versus Wade. We're thematically talking about that this in this week's issue, and this is a sort of a surprising silver lining to all of that, which is how laughter can actually become a weapon. Alex, tell us more about Drew's approach here.
Yeah, and you know, you say she's not a household name, but if you're on TikTok, she is absolutely a household name, for better or for some of these misogynistic type online trolls for worse. Drew is a character who's really increased in popularity over the last year. We got to chat for this story. She is sharp, she is witty, but she also cares really deeply about women who she says she's protecting on the platform. If you see a Drew video in your feed on TikTok, you'll be scrolling and a video of a guy will typically pop up saying some pretty awful things. They're either racist, they're sexist, they're fat phobic. And then all of a sudden Drew's face will cut in, usually with her kind of trademark laughter, cackling at these men. And she basically kind of dismantles them. And she does it in a really interesting way. Drew is very smart and clever, and she makes some really like logical points and basically picks apart these guys with logic. But she also takes these tactics that online trolls are really known for: comedy, commenting on people's appearance, telling the guy he's already going bald, and kind of wraps of these same tactics that online trolls like to use when they go after women on the platform. And I'll tell you, I've seen these guys take down videos or just like completely delete their accounts. They don't take it as well as maybe some of their victims do. So she's really kind of established this role for herself, almost this like folk hero type role, going after guys who are kind of awful on the internet.
Kind of awful.
No shortage of those guys.
I was going to say.
Is that editorializing too much?
Alex, you should know the minute you said balding, there was a major reaction in the control room and studio. One I was not prepared for, I will admit. Alex, let's talk about the approach that TikTok takes here. The internet makes it very easy for people to say all sorts of things. It's also, I think, something social media platforms have really tried to address. Walk us through how maybe that's not enough.
Yeah, so the platforms are a little bit reactive, right? They might ban certain words or allow creators to mute words or block people. But these guys will kind of take tactics that stay a step ahead, or trolls, to speak more generally. If they are banning things like quote, "I hate fat women," and folks notice that language is getting banned or taken down for bullying by the platforms, they'll change tact and say things like, "I only love men who weigh less, women who weigh less than 120 pounds." So the platforms are, whether it's TikTok, Instagram, Facebook, Twitter, they all have policies in place to kind of combat bullying. But look, frankly, these bad actors on the platform move a lot quicker and speak in different languages or use code that is very well recognized by people on the internet. But it's this little bit of a game of kind of whack-a-mole. What Drew's been able to do is basically keep up with the times and kind of, slide a knife through these guys online and keep up with what they're saying and how they're kind of skirting these rules. So there's some things out there. A lot of it depends on fans, followers, or people on the platforms to report things themselves. But, if you can stay a step ahead, then maybe that hand-to-hand combat is a little bit more fierce in the moment.
It just feels like she may have like no shortage of options to pick from. And I'm curious, did you put that towards her? Like, how does she pick who she takes down?
Yeah, so initially she would kind of, I'm talking a year and a half ago when she started this this kind of path, she would look for guys and find them who are kind of saying awful things. These days, she wakes up to thousands and thousands of notifications across all platforms. She has those notifications turned off because there are so many of them. But a lot of times now, her fans, her followers will actually tag her in videos of people who are going after women or who are, slewing racist, misogynistic, or fatphobic comments on the platform. There's another camp. There's a lot of folks who like to attack her. So those are coming straight into her notifications as well. But, it seems like there's a lot out there. I will say, she did tell me that it's getting a little bit tougher to find guys that she hasn't roasted before or subject matter she hasn't roasted before. So, whether that's because she's doing her job too well as she sees it or if things are cracking down a little bit, who knows?
She should come over to Twitter.
But a lot of these things are referrals.
Yeah, she should come over to Twitter. I see a lot of this stuff there. Hey, Alex, just in the last minute that we have with you, can you talk a little bit about the business of somebody with 7.5 million followers on TikTok? Like, how does she make money?
Yeah, absolutely. So Drew wouldn't divulge exactly how much she makes, but she will say she's making a living off of it. There are a few venues for somebody like her to make money. The platforms do pay out a small amount if you're in something like TikTok's Creator Fund. But when I talk to creators across the platform outside of just Drew, they say that's basically coffee money or lunch money. Where they make a lot of their money is on brand sponsorships, brand partnerships, where they'll post sponsored posts with clothing or other products. Drew also has a podcast, so folks will start to venture outside of the platforms as well for opportunities for advertisers or sponsors to work with her. So mostly platforms, sponsorships, or other partnerships is where a lot of these folks are making money these days.
Well, it's a great story, Alex. It highlights a really important issue, and certainly somebody I think who's not a household name for people who are not on TikTok, including myself. Alex Brink, a technology reporter for Bloomberg News. Check out our story in the new issue of Business Week magazine on the Bloomberg and online now.
to the Close, Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close, just 60 minutes left in your trading session. Caroline Hyde, Taylor Riggs, Katie Greifeld, joined now by our colleagues Tim Stenovic, Kriti Gupta in for Carol Massa, and we are welcoming across TV, radio and YouTube, as always, our audiences to, well, watch a market that sort of wants to get higher, but a lot of headwinds, in particular, it's geopolitics today, Tim.
Yeah, it really is. I mean, searching for direction are the words that I would use to describe today's trade. I mean, we've seen it move between gains and losses, the S&P 500, that is, Kriti, at least a dozen times already today. And as of a couple minutes ago, it was looking like things were firmly in the red, but look, we're moving a little higher on the S&P right now.
Yeah, and I'd say that the NASDAQ, well, it's in the green, it's flat, but it's barely, just barely in the green. And I think you really nailed it here. It's geopolitics, but I think there's also perhaps a little bit of technical factors. Remember, we ended with a really strong week last week. How much of this is a pretty natural pullback?
Yeah, very well said, given we had the best, what was it, best week since November 2020, best month this year. We're looking at the moment, the S&P 500 pulling back 0.2%, off by 8 points, but we're certainly bouncing off of our lows. The Dow Jones off by, let's call it 0.1% at the moment, and we are seeing a little bit of a pickup in volumes on that particular benchmark. The NASDAQ, though, volumes are lower, and so too is NASDAQ, basically flat, lower by 2-3 points on the day. Russell 2000, the only one that's managing to outperform on the day. We're up 0.25%, so those domestic-focused small caps managing to pull their weight, Taylor.
A little bit of a mix here on the individual sector level, but still definitely more tilted weighting to the downside. As you can see there, energy, financials, materials, certainly the biggest decliners here. Financials, one that we're watching, of course, given the inverted yield curve that progresses from 20 to now 30 basis points of inversion. At the top of the screen, though, Katie, kind of another mix because you both staples and discretionary in the green.
Searching for direction at the sector level, at the single stock level as well. If you look at Apple, we all know the story. Apple is going to sell $5.5 billion of bonds in 4 parts, of course, to fund buybacks, dividends, well off the lows of the session, down only about 0.3%. Maybe it'll go green. Also interesting, you have Royal Caribbean, too, also coming out with an offering, a private offering for as much as $900 million in senior convertible notes. These shares firmly lower, down by about 8.5%. Meanwhile, Boeing, though, double dose of good news here. Defense workers delaying their strike at least a few days. Also, Boeing getting the next step in deliveries for that 787 Dreamliner. That's been on hold for a while. Boeing shares up almost 7%. And finally, I did want to call our attention to Uber, rallying ahead of earnings tomorrow morning. The focus is going to be on Uber Eats and, of course, that driver shortage. But shareholders feeling pretty good. Uber up more than 4% right now.
Yeah, good thing to remind us of all the earnings still to come. Lyft going to come, DoorDash going to come, Airbnb. We got such a read on this week as well. Meanwhile, let's just show where we have been, because it was really broad-based in terms of a rally last week. 87% of the S&P 500 stocks rose as an index. We added $3 trillion in terms of market cap. That doesn't, of course, occur unless you have Apple and Amazon and some of the big tech heavyweights playing ball. But really, this earnings season thus far has been resilient, a relief in some way, Tim.
Yeah, it's really interesting. I mean, a big question that we've been asking our guests this last hour, and we're going to continue to ask, is whether or not we've seen the bottom in on the S&P 500. Abigail Doolittle, from a technical perspective, said she would be surprised if we had seen the bottom come in. And, you know, the S&P 500 is north of 4,100 right now, but she said it could go down, at least from, you know, a technical perspective, to 3,000 at some point later this year. Well, speaking of later this year, the question about whether or not we head into a recession is certainly dominating everyone's mind. U.S. Treasury Secretary, former U.S. Treasury Secretary Jack Lew, said that a deep recession is, quote, not out of the question. He spoke with Bloomberg's David Weston on balance of power. Check it out.
I think we've never seen an economy coming out of a shutdown like this at a moment like this, when the world is in the kind of unusual and unique spot that it's in. I'm optimistic that this can be managed without having a full-blown deep recession, but it's not out of the question.
That was former U.S. Treasury Secretary Jack Lew on Bloomberg's Balance of Power a little earlier. So he's optimistic, but Creedy, a deep recession is not out of the question here.
Well, I think what's so scary about this entire conversation about a recession is the ranges that you're seeing from all we need is a technical recession. That's really what we're going to see, a reversal in the stock market. Two, we're going to see a deep recession that's going to rival the likes of 2020, the great financial crisis as well. And I think that level of uncertainty makes this market, incredibly hard to navigate, to where your only clues really come cross-asset, weaker dollar, weaker treasuries, that kind of signal.
Maybe some clues from the companies themselves, the CEOs, the CFOs that we continue to get in this earnings season. It was Nuveen that put together a word cloud of sort of all the words that they're hearing, and revenue and guidance are still dominating, but more of these red flags and words like inflation headwinds are also still turning up in force. But for now, it does seem like, at least for now, maybe more positively tilted to the upside in terms of that commentary.
And the commentary, I think, is what's so important, beyond just the actual numbers that we get during earnings season, which is a million. But if you actually pay attention to what the companies are doing, when we talk about fears of a recession, this is where it becomes self-fulfilling. If the C-suite is really concerned, if they start layoffs, does that ultimately crack the job market? And that's where it sort of becomes a self-fulfilling prophecy.
And is any of that anecdotal data that we've heard from the tech companies, the real estate companies, actually going to figure in any of the data this week? We get the JOLTS tomorrow. We get jobless claims on Thursday. We get the all-important non-farm payrolls on Friday. Thus far, we haven't. And we're still expecting a pretty strong labor market, all told. We're still expecting to see far more job openings than there are unemployed people at the moment. So when does that start to factor in?
Yeah, it's a question I've been asking myself, because we have seen a lot of anecdotes come from startups and from Silicon Valley over the last 6 or 8 weeks, Creedy. I think one part of this conversation, too, that's really important is if the U.S. does enter a recession, consumers are in a pretty good spot, at least as of right now, because they still do have some excess savings from during the pandemic. And it does seem like, well, cross our fingers, right? Inflation is coming down a little bit, Creedy.
That's a big call, Tim.
I don't know. Look at next week's numbers. It's
8.8.
8.8, below 9.1. It's below 9.1. And look at oil, though. Look at oil and look at gas prices. They're coming down.
Yeah, but then you still have other things that are still going up, things like rent, things like wages as well. So, this is at the core of it, the bet that me and Matt Miller are making about what is actually the bigger driver. But I think you really hit it, the nail on the head when you talked about unemployment, because if there's any question I could ask Chairman Powell is how much unemployment is actually acceptable to the Federal Reserve, and we still don't have that number.
And we were speaking with Ira Jersey, too, about the Fed put. And again, more calls, Tim, here that the put is maybe lower within the equity markets, within the bond markets than we once thought, given, of course, the clear direction to fight inflation.
Okay, the conversation continues. The jobs numbers tomorrow for JOLTS, and then, of course, non-farm payrolls on Friday. Lots of data in between, too. That is going to do it for our cross-platform coverage. We'll be back together again on TV, radio, and YouTube, 4 p.m. for our Beyond the Bell coverage when we take you through today's market close.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Creedy Gupta. We're live in the Bloomberg Interactive Brokers studio in New York. I want to hear more, Creedy, about this bet that you have going with Matt Miller. I heard a little bit about it on Bloomberg Markets this morning.
So after the last CPI print, which was, of course, 9.1%, Matt said, well, this has got to be the peak, right? And I was like, Matt, no.
You don't think it's the peak, and he does.
And he thinks it's the peak. Okay. The bet is the winner, and he has some elaborate spot that he wants to go to, some flying something.
Yeah, he said, I believe it was Hebron, Kentucky, just south of Ohio. It's just outside of Cincinnati
There is
Airport,
some road stop something that he wants to eat at, and I have to pay for transportation and the meal itself.
It's fine. The flights to and from Cincinnati are not very expensive right now. My wife is from there, so we go quite a bit, and it's an easy flight.
But
so
you know what? He promised
me
that I
wins,
can
then you gotta go.
Well, if I win, I get to pick any spot in the country, and he has to pay that as well as airfare. So I'm excited about that.
But do you guys go together?
Yes, obviously.
Or he sends you on a solo
so the way
trip?
this whole thing started is that Matt and I we get breakfast every morning because we can work the early shift, or sometimes we'll get lunch because he's on this weird diet. But basically the argument was, here's how we're gonna make this bet is like one of us is gonna pay for the other, as we do anyway.
Who's gonna cover for you guys? That's what I want to know. When you're both out at some time,
you are more than welcome to volunteer. When one of us makes this bet.
Who's covering the early shift when you guys
starts
are
at
out?
2 a.m. Have fun.
Okay, that's what I'm wondering.
But basically the takeaway here is that his argument is that commodities was driving inflation. My argument is that rent and wages are going to keep driving inflation. So we'll see which is the bigger mover.
Okay, some real fundamentals here. I'm looking forward to seeing who ends up winning this. It'll be a teachable moment, a learning opportunity for everyone. Let's go to Washington, D.C. now for world and national news. For that, we go to Nancy Lyons. Hey, Nance.
Thanks, Tim. Speaker Nancy Pelosi has stopped in Singapore, her first stop in a tour of Asian allies that she would plainly like to include Taiwan.
The visit, which the Biden administration has tried to discourage, would come as Xi Jinping prepares to be awarded his third term. Former Defense Secretary William Cohen pointed out in a Bloomberg interview.
He will not be contested in the so-called election coming up. And I think the Chinese will regard this as pointing a finger in the eye of Xi Jinping. They will respond, if not militarily. I think they will find a way to respond that will inflict some harm upon us. I don't think China is bluffing.
Cohen said Asian leaders are likely to tell Pelosi how concerned they are about the potential fallout from a confrontation between the United States and China. In Washington, Irv Chapman, Bloomberg Radio.
Ukraine has made its first grain shipment since Russia's invasion. UN Secretary General Antonio Guterres says the cargo ship is heading for Lebanon.
A cargo ship loaded with more than 26,000 tons of corn became the first commercial ship to sail from the port of Odessa since the 25th February.
UN Secretary General Antonio Guterres, the loss of exports via Black Sea ports that have been blockaded by Russia has shaken the global food trade. California's largest fire has killed 2 people as it rages out of control south of the Oregon border. Officials say the McKinney fire has grown to more than 55,000 acres. Firefighters are facing soaring temperatures and a weather phenomenon known as dry lightning. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Tim Stenavec and Kriti Gupta were live in the Bloomberg Interactive Broker Studio. Kriti, did you watch the Super Bowl? No, that's okay. Hey, that's okay. Everything goes back to Cincinnati, okay? The Bengals were in it this year, so I made sure. I was flying back from...
Matt would be so proud.
We were out in L.A. for doing our Super Bowl coverage at the Business of Sports event, which was a Power Players Summit, which was a great summit, by the way. Go listen to that on Bloomberg
My invite
podcast.
must have gotten lost somewhere.
Yeah, it did. Anyway, I flew back and I was watching the Super Bowl, and there were a lot of ads for crypto in there. We saw some from Larry David, some from other celebrities, including Matt Damon.
Yeah.
And our Bloomberg crypto team got together and did some really interesting analysis where they looked at the celebrities who were pitching the asset classes or the assets, and then looked at the performance of said assets since celebrity pitch. We've got one of the members of the crypto team with us. Emmanuel John Milton is a crypto reporter for Bloomberg. He's with us right now in the Bloomberg Interactive Brokers studio. How did this story come together, Emmanuel? How did you guys think about this?
So when I started, I was talking to my editors, and anytime anything crypto and celebrity related showed up, I would immediately pitch it. I'd be like, oh my gosh, Cristiano Ronaldo, he's in crypto. And then my editors would be like, no, it's just promotion. Don't worry about it. Find something else. And then eventually, I guess I had asked them enough times, and they're like, okay, fine, you win. You can just get into it, figure out like what these like celebrities have done. And then I kind of wanted to figure out like how the prices have changed, if these touts have been good for fans and people have followed their advice.
And spoiler alert, for the most part, not so good. Yeah.
So walk us through the numbers behind this. I mean,
so the first 3 celebrities on here, so they were, so Matt Damon, Tom Brady, and Matt James. So Matt Damon's an actor, Tom Brady's a football player, and then Matt James is on The Bachelor, which is on tonight, by the way.
I've heard of 2 of 3 of these people. I've actually never heard of The Bachelor guy, but go on.
But yeah, so
clearly Emmanuel's a fan of The Bachelor.
But so those 3 people are advertisers of exchanges. So those are places where you can buy and sell cryptos. The next 3 are people that, so Mike Tyson, Reese Witherspoon, and then French Montana. All of them sold NFTs. And then the last 3 sold their own tokens that were not crypto, that were cryptocurrencies, but not Bitcoin and Ethereum. They had their own token. So Nick Carter, who's a Backstreet Boy, had a token called SafeMoon. Paul Pierce with Ethereum Max, and Mark Cuban talked about Titan. And I guess of the 3, the only person that, of all the people that we talked to, the only person that responded was Nick Carter. And he said that he was never paid for. He just tweeted about it, and then Kind of sad though, because the day after he tweeted about it, it went down 99% after getting to its peak.
Wow.
Yeah.
Okay, so it was interesting to see that the only person who got back to you was Nick Carter here. Take us through some of these other celebrities here, because we got Mark Cuban on the list, we got Mike Tyson, Reese Witherspoon, a really notable face there. What were they pushing?
So,
endorsing, excuse me, I don't want to say pushing.
So Matt Damon was on the famous Fortune Favors the Brave ad. So he's actually been made fun of for this already, but South Park did a recent sketch on it. Stephen Colbert did a sketch on it. And he did the whole very bravado-filled ad where it's like, you must invest in crypto. If you're not, you're a coward. He didn't say the coward thing, but that was kind of the vibe of it. And then it's like Mike Tyson had to, the NFTs actually look great. Mike Tyson sold some NFTs, and an artist brought them out, sold them, and then he just advertised them. And those are also down a lot. So it hasn't been super successful for anyone on this list.
Well, it's a really good story and a good check-in on where crypto is, especially after last month we saw Bitcoin have the best rally that it's seen in many months. Emmanuel John Milton is crypto reporter for Bloomberg. He joins us in the Bloomberg Interactive Broker Studio. Check out Emmanuel's story. You can do that on the Bloomberg terminal, online, and of course at Bloomberg.com. We are just about 44 minutes away from the close today. We still see the S&P 500 in the red, down close to 0.1%. The NASDAQ higher by just close to 0.1%. The Dow Jones Industrial Average up close to 0.1%. As we've been talking about throughout the day, a lot of today's conversation has to do with Nancy Pelosi, the Speaker of the House, her trip to Taiwan. In just a few minutes, we're going to be joined by National Security Council spokesman John Kirby. Let's head over now to our colleagues Caroline Hyde, Joe Matthew, and Taylor Riggs as they speak with U.S. National Security Council spokesman John Kirby.
We have some breaking news, an important guest to welcome, because you're now joined by a global simulcast. Bloomberg TV, radio, and YouTube are listening in, as Bloomberg's learned that, of course, U.S. House Speaker Nancy Pelosi is expected to visit Taiwan on Tuesday. That's in fact defying Chinese authorities, who have warned of consequences if the trip takes place. For more, we're very pleased to welcome National Security Council spokesman John Kirby, alongside Bloomberg's Washington correspondent and host of Sound On weekdays on Bloomberg Radio, Joe Matthew. Joe, please take it away.
Thank you, and greetings from Bloomberg News in Washington. Admiral, thank you for being with us. You just briefed reporters at the White House about this issue, and you made clear that Speaker Pelosi has precedent for this trip and that there has been no change in U.S.-China policy. Why then did President Biden suggest a couple of weeks ago that the U.S. military thought this might be a bad time for her to go?
Well, I think the president was answering a question he got from a reporter that surrounded the context of the kinds of information we give to Speaker Pelosi before she travels. We met with her staff and with her at various levels before she made this trip to make sure that she could make the best decisions on her own, that she had all the information and context she needed, and the president was referencing that. But it is up to the speaker. She gets to decide what her travel itinerary looks like. The president respects that.
And I realize that you are not confirming this trip, but if she does, in fact, show up, you mentioned the fact that there were live fire exercises conducted by China last night, and you said that the country is positioning itself to potentially take further steps in the coming days. I spoke earlier, Admiral, today with Defense Secretary Mark Esper, who suggested that the USS Ronald Reagan was sent to the region in case Speaker Pelosi did visit Taiwan. Is that accurate?
No, Ronald Reagan is already forward deployed to the region. Her activities in the South China Sea were long planned. We keep a vigilant posture in the Indo-Pacific because we need to, but it was not related to any potential visit by Speaker Pelosi.
Admiral Kirby, we know, of course, that you've just said that the United States has no interest in increasing tensions over Taiwan, but this does increase tensions, and what therefore do you have to do about it?
I would let the Chinese speak for the degree to which they feel this is increasing tensions. I would just remind that a Speaker of the House has gone before in the mid-90s.
25 years ago, though, Admiral, 25 years ago.
Members of Congress routinely go to Taiwan, as is their right. This doesn't if she goes, and I'm not confirming whether she will or not, it's not going to violate any sovereignty issues. It's not going to violate territorial integrity, as the Chinese spokesman alluded to. It will simply be a move in keeping, very consistent with American policy now for decades. Nothing's changed about our adherence to the One China policy, and nothing has changed about our commitments to helping Taiwan's self-defense under the Taiwan Relations Act. And the Speaker's trip is in the context of that very stable, very solid, very consistent American policy.
How do you, from a national security perspective, prepare if China follows through with what they've said of there will be consequences to this?
I'm not going to speculate here or hypothesize, and I'm certainly not going to say anything that gets ahead of where we are right now. What we said today was we're watching this very, very closely, and we have indications that the Chinese might take some actions in a military way to protest a trip by the Speaker. They can talk about what they want to do. What I wanted to make clear today was that we are going to make sure that if the Speaker decides to go to Taiwan, she can do so safely and securely. And number two, that we are able and continue to able to meet our ample security commitments in the region, the responsibilities that we have. The President takes that very, very seriously. But look, there's no reason for this to come to blows. There's no reason for this to erupt into some sort of conflict. There's no reason for the Chinese to use a potential visit by the Speaker of House as some sort of pretext to escalate tensions higher than they already are. And I would remind you that in recent days and weeks, it is the Chinese side that has, through their rhetoric and their activities, including this live fire exercise, the ones that are escalating the tensions.
What are some of those other indications that you're seeing?
Well, again, I think I laid these out at the briefing. We're seeing indications that they could conduct missile launches. We're seeing indications that they could, in a broad way, move to violate Taiwan's air defense identification zone, or do operations across the midline in the Taiwan Strait. There could be more naval exercises. I mean, we're seeing indications of a lot of things. And we obviously know that there could be things they do post a trip by the Speaker.
We speak with Dr. Ora Gordon, Regional Medical Director of the Providence Center for Clinical Genetics and Genomics, on the importance of early cancer detection.
Plus, we learn how to feed a planet with Guardian columnist George Monbois.
Speaker of the House to go.
Admiral Kirby, you've referred a few times, as you did in the briefing today, about consultations that the administration had with Speaker Pelosi's office on the possibility that this may happen. Did you discuss any sort of overt actions or news conferences or any activities that she might be reluctant to conduct while there so as to not inflame tensions? Does the White House have any input on her activities while she is there?
Our job is to make sure she has all the information she needs and to make sure from a security perspective that she can make a trip wherever it is safely and securely. The Speaker decides what she's going to do, where she's going to go, what she's going to say when she's on the ground. We simply provided her information and context so that she can make decisions about her travel.
General Milley has suggested that the Pentagon is prepared if she decides to go to provide whatever security is necessary. Can you just clarify for our listeners and viewers that while I understand the White House is not behind this trip or making decisions on it, it is in fact the administration that would provide her transportation and security?
She routinely travels aboard U.S. military transportation aircraft. She is on this trip. So, of course, we help her get where she's going. And depending on where she's going, we might also be called in to help make sure that she can do so safely and securely. I'm not going to talk about that on TV, what those protocols might be for a trip like this. I can just tell you that we are 100% committed to making sure she has all the information she needs and that when she travels, she can do so in a safe and secure way.
Of course, for our radio audience, we are indeed speaking with the National Security Council Coordinator, John Kirby. And Admiral Kirby, I just want to go back to, you said very eloquently, there is precedent for this. And yes, there has been 25 years ago, but also a lower level US lawmaker just went back in November. And that too prompted a military response from China. You've said, of course, that this would be irresponsible for China to react in such a way. But is there any way in which you think the US is currently being irresponsible?
I think that we are being everything in terms of responsible about this trip. Every approach that we've taken has been a responsible one. The Speaker decides to travel, we make sure she is informed, and again, she can do so safely and securely. And by coming out today, as I did, and laying it out for the American people and for a global audience, what we're seeing, what we're hearing, and how we are treating this potential trip. I think that is very responsible. And making it clear, again, publicly. We did it last week when the president talked to President Xi. It was important to do it again today. That is, in terms of American policy, there's been no changes. So there's no excuse, there's no reason to up the ante here or to increase tensions. There's no change to American policy. And if the speaker goes, it would be very consistent with that same policy.
Is there a change in American policy when it comes to $300 billion in tariffs that we still have on Chinese goods?
The president is still working with his team to decide if he'll do anything about the tariff regimen, and if it needs to be changed, how it will be changed. I'm not going to get ahead of the president. He's still working his way through that.
Admiral, among the possible actions that you predicted or warned of, I should say, in the briefing was a large-scale incursion into Taiwan's airspace. If China did do something like that, would there be a U.S. military response?
What I said was a potential large-scale incursion into their air defense identification zone. That's different than their national, not national. It's different than airspace. It's the air defense identification zone. And again, I don't want to speculate about U.S. military activities one way or another. We were going to watch this very, very closely. There's no reason for it to erupt into conflict, and I don't want to speculate beyond that.
Really appreciate your time and your information. National Security Council Coordinator, Admiral John Kirby. And of course, make sure to catch Sound On with Joe Matthew, airing 5 p.m. Eastern, weekdays, of course, here on Bloomberg Radio. Much more ahead as we count you down to these closing bells, Caroline, as we delicately pivot from some of the geopolitical news to now sort of a global equity market check. Of course, China an underperformer today as well. When we take a look at the equity markets and rolling over.
And a big thank you to our team at Bloomberg TV, including Joe Matthew. He is, of course, the host of Sound On every day at 5 p.m. on Bloomberg Radio. They were speaking with U.S. National Security Council spokesman, Admiral John Kirby. Kriti Gupta and Tim Stanovic were live in the Bloomberg Interactive Broker Studio. Kriti, I know you were watching and listening to that interview closely because this is a story that you've been watching very closely. What stuck out to you?
Well, the fact